Okay, good morning, ARMR insiders. Welcome to the morning meeting of our virtual hedge fund. Thank you all for joining me. Hope you all had a wonderful weekend. If you were able to have a wonderful weekend, knowing what was going on around the world. So let's get our morning meeting set up here. Grab a pen, piece of paper. We're going to go over the only trade we're focused on this desk all day. We are simplifying everything we're doing in the stock market. So let's go over how we got here, what's happening now, what our strategy is going forward. I've invited anybody who wants to join us today, like we did on Friday, to join us on the desk. I want to try to help out as many as I can. Okay, so let's all come together, share information together, execute a strategy that works for each of us individually. There's a virtual hedge fund desk, right? I ran hedge funds for a decade. I've been running capital for individuals and myself for 35 years. So I'm sharing with you all the processes I've been through before. I've been through this before, multiple times, and anyone who's been in the market for a long time has gone through these periods. 2000, 2001, 2008, 2020, 1998. The Asian crisis. I've been through a lot of them. So let's just go through methodically how we got here, what the process is now, what the strategy is going forward. I respectfully request all of you understand this is not investment advice for you. I don't know you. You've got to figure that out. I'm sharing with you what I'm doing personally, what I'm doing professionally, and I hope it helps you think through the process that you determine on your own. You got to figure out your risk tolerance. You got to figure out your goals, what you're trying to do with the portfolio. And then you have to execute your strategy and be the smart money. Nobody can do that for you, okay? But here is a framework for how I'm going to execute. And then we'll execute all day on this desk, and I'll be sharing this live stream with all of you. Hey, guys, share this link with anybody who you think needs the help. Anybody you think deserves to be part of this process with us. Okay, so we're all pulling on the same oar here, navigating our way through what is a fairly nasty bear market, and it's changing minute by minute. So I'm going to share with you what my thoughts are now, what the strategy is. Who knows what the next story is that's going to hit the tape. ARMR Insider Fitch just threw into the Slack room. Fed's having an 11:30 meeting, closed door meeting. Market rallied on that. I've been through this before. Let me tell you something. In 2008, there were a whole bunch of closed door Fed meetings. Market would rally a little bit, then crater, then rally and crater until the Fed actually did something. So who knows? History doesn't repeat, it rhymes, right? So let's go over for a second where we are, how we got here and what the strategy is. Okay, so we have to begin at the beginning, which is our risk monitor turned red on the 21st of February. So our risk monitor, let's just think this through methodically. You got to, my message to all of you is to shut out the noise and the hysteria all over the place. I don't have a TV in my trading office. I don't spend a second listening to the bubbleheads on CNBC. It's totally worthless information. And all it does is mess with your own strategy. You want to bring in information from different sources? Go ahead and do that. Then figure out your strategy, and when the bell rings, shut off all the noise and execute that strategy and live with those results. Sometimes you'll be right, sometimes you'll be wrong. As Stanley Druckenmiller said, investing is not about being right and wrong. It's about how much money you make when you're right versus how much money you lose when you're wrong. That's what investing is about. We're all going to make mistakes. We're all going to lose money on trades, right? So you got to maximize your success, minimize your loss. And the only real way to do that is to hyper focus on your strategy. Okay. So on this trading desk, on this virtual hedge fund desk, how I run my own capital and capital for others, it all flows through the risk monitor. 10 indexes, 9 indexes, and Bitcoin. So 10 assets, algorithms that we have designed for the volatility of each. We look for confluence. When they're all doing the same thing, there's only one animal that can make that happen, and that's institutional money, talking billions of dollars, okay? Trillions of dollars. Those institutions, why is it important? Because they don't put their money to work like you and I might in one day. They don't have a personal account. They're not buying, oh, I could buy this stock, give me 1,000 shares. They're buying millions of shares. So they have to look ahead 3, 6, 9, 12 months, whatever their strategy is, and say, okay, window's open, we're going to start putting money to work. And they start doing that over a period of time. This is why the 50-day moving average, the 200-day moving average works as support areas, because very often they buy on those areas over 50 days, 200 days, okay? I'm oversimplifying, but you get my point. So if institutions are moving in that direction, it's our job to get there before them, right? We see that happening, we get there. That's the beauty. They're the elephants on the Masai Mara plain, and they're lumbering along towards the watering hole. We're the cheetahs. Once we see where they're headed, oh, that's the watering hole. Bam, we get there as fast as we can. So risk monitor, in case if you're new to this, maybe you've been with me for a few years and you still don't believe it, it doesn't get more clear than this. So I hope this helps you. When the risk monitor goes from green to red quickly, it tells you the market is incredibly dangerous. When we get a new risk on green that then flips red within a 5-day window, the risk monitor is giving you incredibly valuable information if you know how to use it. The simplest way to use it is that's a wildly bearish signal, and you have to defend capital, whatever that means to you. If you want to get out on a limb and short, which we did, get in there, make some money on the downside, that's great. You don't even have to do that. It's very rare for our risk monitor to give us a new green signal that immediately goes red. But as I shared with you on the 21st of February, that happened 4 times in 2008. It does happen. And it's a wildly bearish signal. And it can lead to destruction in the market. Exhibit A. Risk monitor went red in this pink box here. That's the 21st. Now the market's imploding. The Trump Tariff Tantrum is the fuse that lit the implosion. But I would submit to you what I shared with you over a month ago. 2025 has an eerie similarity to the year 2000, which led to the recession of 2001. And I would submit to you the market was going down anyway. And the Trump Tariff Tantrum was just a fuse that lit the explosion. In the year 2000, you had a dot-com bubble from 1998, 99, 2000 that collapsed. NASDAQ was down 40% in 2 months. Fast forward to today, and I shared this with you a month ago. Risk monitor went red, and I shared with you over a month ago. This looks like 2000 to me. We have an AI bubble. There's excesses. I don't know if the NASDAQ's going to drop 40% in 2 months. History rhymes, it doesn't repeat. But then you throw the accelerant of a Trump tariff tantrum, and we're headed towards that type of a loss. Okay? So on this trading desk, the way we've managed that risk for the majority of our assets, when the risk monitor went red, max cash. But max cash to us in the first stage of a risk monitor red like that, probably 65, 60, 50 to 70% cash. That's max cash because we're still carrying investments that are longer term in the portfolio. For instance, our dividend stocks. Okay. And then I'm going to have to give you a call back. All right. I'll give you a call back. Okay. And then I forgot my place. I think I was talking about the first leg down. We're still carrying some of our dividend positions. Okay. Because not every risk monitor red turns into this. So it looked like the market was making a double bottom. We're headed into Trump tariff discussion. And in my personal opinion, I thought the market was going to go up on that, right? And I think obviously a lot of players did. Looked like the market had a double bottom. Usually you sell the rumor and you buy the news, right? Market was up in the aftermarket as Trump started speaking. And then he dropped the bomb of these tariffs that were like dramatically larger than anybody thought, okay? So the rest of our portfolio got blown out as fast as we could blow it out last week. And we're sitting 90%, 95% treasury bills with a position in physical gold. That's it right now. So let's talk about now what the strategy is on the desk right here, okay? I'm going to go over with you just a couple of thoughts of where we are right now, just to put this in perspective. China's stock market plunged in one day yesterday. It was the largest crash for China since 2008. Now, China's looking to devalue its yuan versus the dollar. So before anyone gets too excited about the Fed having a closed door meeting at 11:30, if the Chinese devalue the yuan versus the dollar, there is going to be some hedge fund out there, some big hedge fund out there, a whole host of hedge funds out there that are in the midst of a leveraged currency trade that's going to get blown out of the water. It may be why the market's crashing like it is right now, because there's a currency FX panic going on. They're talking about devaluing 15 to 30%. That would be like a massive move. It would be such tail risk. This is one reason why the market's panicking. It's not just as simple as you may think, or they might tell you on CNBC. It's not as simple as maybe a deal will get done. Maybe there'll be a trade deal get done. If China devalues the yuan to that degree, you are going to have major imbalances in FX trades that are going to blow up. There's going to be a hedge fund that blows up from that. And so, like we had in the year 2008, it's like a rolling crisis. Everyone will take a breath. The market will rally for a couple of days. Don't forget, the biggest two-day rallies in history happen in a bear market. That's a fact. So what I'm telling you this morning doesn't mean the market can't skyrocket today. It might. We'll go over my strategy today in a minute. But what I'm saying to you now is you can have all the trade deals with Vietnam and, Malaysia and Japan. They come to the table, they negotiate. That's great. Market goes up on that. If China then comes out and says, screw it, we're doing this, we're going to devalue 15 to 30%, market's going to struggle with that. So there's so many moving parts right now. The key, in the immortal words of one of my first clients ever, Sam, Herb Rosen. I just love that man. He's the greatest guy ever. And he used to say to me, Brett, don't fire until you see the whites of their eyes. And I think maybe he was around during the Civil War. That's how old he was. He was a great guy. All right. So we're not firing until we see the whites of their eyes today. That's for darn sure. All right. Nikkei futures. Let's go over this real quick. Japan imploding. Nikkei futures hit the circuit breaker and the market was suspended. Okay. Here are a couple of other circuit breakers that were hit overnight while we were sleeping. China, Taiwan, Japan, Russell futures for Australia and Singapore. All of those markets hit circuit breakers. 70% of the Russell 2000 members here in the US are at 3-month lows. It's the highest number since COVID. NASDAQ has fallen by at least 20% for the first time since 2022's bear market. That max drawdown was 35.5%. So we're down 20 on NASDAQ. 35.5 was the drawdown for COVID. Trump over the weekend, when asked about the markets, said, sometimes you have to take your medicine. I'm concerned that there's too much. When I get direct messages, I look at my Twitter feed, my X feed, investors that I'm speaking to, that was on investors that are calling me. Okay. There are too many right now looking to buy the bottom. This could be the bottom. Let's buy the bottom. Let's buy the bottom. And so my message to you today is this is massive destruction, and a V bottom is probably not the result. It's going to take time to set up an investable bottom here. There will be stories that hit the tape that rip the market higher for a day or two. I submit to you, the investor hasn't missed anything because the market goes up for a couple of days. These type of bear markets tend to be rolling bear markets, and there'll be moments where the market catches its breath. Then the next story hits the tape. It takes time to build an investable base. Okay. But just to wrap up on that thought of the bounce, I saw the story hit the tape. U.S. single stocks shows shorting of ETFs at its highest level ever right now, right? So there's massive shorts. You got guys in, I think it was Taiwan, came out and suspended. You can't short now in Taiwan, which never works, by the way. Not letting people short, just the market ends up plummeting again, right? So you suspend it, market goes up, and then it crashes again. It's kind of oxymoronical move. But anyway, so let's get to what I'll be doing on this trading desk today. What is my single focus on the trading desk? Before I get to that, let's take a look at this chart right here. I thought this was very interesting from Jim Bianco, and it's worth a discussion real quick. Okay. Here's a chart. Okay. Here's a chart of the presidential approval rating. Presidential approval rating. So what he's saying is he's reading everybody talking about how low does the stock market have to go before Trump does something to arrest the decline. Bill Ackman's out there, screaming about it over the weekend. Trump, do something, pause for 90 days before you enact, blah, blah, blah. And then Trump comes out and says, sometimes you got to take your medicine. So Trump's got no interest in pausing the tariff tantrum that's going on. And Bianco said something very interesting. Everyone's talking about how bad does the market have to get before Trump does something. And his argument is that's a mistake. That's not what you need to look at. What you need to look at is this chart, presidential approval rating. And the simple fact is President Trump's approval rating at 47% is still above anything he had during his first term. It's also above the average of the last 12 years. and above 1 standard deviation of all readings since 2013. This is Joe Biden, the teal color, Donald Trump's first term. This is Barack Obama. Okay. And so what he's saying is, as long as that number stays 47%, Trump doesn't have to do anything. The Republicans in the Senate, they're not going to leave Trump if his approval rating's like that. So what we should be watching is, does his approval rating start to plummet? And that might get some movement. So I thought that was interesting. Now let's talk about what I'm going to do here on the trading desk today. There's only one trade I care about. Okay. In a market like this, you need to simplify what you're doing. Simplify it. The risk monitor went red for us on the 21st of February. We have defended capital ever since then. I don't care if you made money short. I don't care if you lost a little bit. Maybe you were still long some things. You raised cash. Market kept going down. You lost a little bit. Your alpha's gone berserk if you respected that risk monitor red signal. What's alpha? What's alpha? Let's say your portfolio is even down 5%. Market's down 20%. You have huge outperformance versus the market. Our only focus now on this desk, if you're going to trade with me all day, I'm not trading Tesla. I'm not looking at NVIDIA. I'm not trying to trade the hateful eight. There's not a favorite stock out there I'm going to pick up. I'm not going to go buy Bitcoin. I'm not going to try gold or silver. I don't care about any of it. My sole focus is to harvest the alpha that was so important and difficult to capture by protecting capital because of the risk monitor information that we all had. And the first way to do that is to get long the S&P. I don't want a lot of risk. Getting long the S&P is not a lot of risk compared to risk out there. Long the S&P. All I need to do right now is get a packed, powdered base of S&P in my portfolio. Everything else will spring from that over the coming weeks and months. Once I've earned the right to take more risk, meaning I've put on my S&P position and I'm making money, then I can start building out my favorite stocks, right? I'm working on my whiteboard. I got all these names on my whiteboard, top shelf stocks to buy. I've got them ready to go. They're plummeting right now. You could do whatever you want, okay? But I'm not looking to buy falling knives on my favorite stocks. Hey, I love Palantir. As it plummets, go buy it because it's down. That is not an investment strategy. Go buy it because it's down. It's not an investment strategy. Catching a falling knife cuts off your fingers. If I'm going to try to catch a falling knife, I want it to be a butter knife. And that is the S&P. That's the S&P. If I'm going to take a shot, it's going to be the S&P. And I'm either going to go flat SPY. I got 90% cash in portfolio, so I don't really need the leverage. Or I might use SSO because what I'd like to do is think of layering on a portfolio, okay? So in a very conservative account, I might just do SPY and I don't want any leverage. My own personal assets, you know, I share with you my ARMR portfolios. I'm probably going to use SSO because I ultimately see myself, maybe I put 50% of my capital in SSO, which is double the index. So now I have 1-to-1 exposure with the market. So I'm not looking to put on leveraged exposure to the market. But what I want to do is maybe have 50% of the portfolio SSO, which means I get to carry a whole bunch of treasury bills, which are paying me a 4% yield, right? If I use SPY, I have to put all the money to work. Now I'm not getting any interest. So I might want to put SSO on and collect my interest in the other half of the portfolio. Do you see what I'm saying? And if I get that trade on correctly, when I get that trade on correctly, and I hold it overnight and it starts going higher, and now I've earned the right to take more risk, I have another 50% of my portfolio that I can start investing. I'll probably hold SSO and I'll build on top of it. Once my SSO position is successful and I've earned the right and I'm harvesting alpha, I'll have treasury bills and I'll start selling my bills off and making investments into my top shelf stocks to watch, stocks to buy names that I share with you in the Slack room and that I share with you on our website. Okay. So I'll keep doing my research. I'll get myself ready. But that's how you're going to see me build a portfolio. So I'll either use SPY in a very conservative portfolio where I might not buy an individual stock for a while. Okay. Or if it's a portfolio where I see myself moving my top shelf stocks to buy, stocks to watch into my portfolio over time, then I'm going to use SSO. I might have a 25% position in SSO, giving me just 50% exposure to the S&P. Nothing wrong with that. I'm harvesting alpha. Every 1% the market goes up, I'm collecting 0.5%. That works. I may do that. That's the only strategy I care about. Don't talk to me about it. You're going to join me on my desk today. You're going to be on the desk trading with me all day. Don't talk to me about how great a stock looks. I don't care. You can't possibly know right now what the value of a stock is. That's why the market's plummeting. Nobody can model what the earnings or revenue are going to be of anything right now. So the only focus, I got blinders on, harvest alpha. I'm going to use my carry trading strategy, which is what I do to day trade, to get on a trade. At some point in here, we're going to get on a day trade that goes berserk to the upside. I'm going to carry that overnight. Some of it. I'll probably take some off the top and then I'll carry a position overnight. Because we'll have earned the right to take the risk. Because we'll be playing with house money. We'll say, geez, we're up so much right now in this position. Worst case scenario, goes back to break even, I'm out. And I made money because I'll book some profits at the end of the day and I'll carry a core position overnight. Then we'll wait to see. Does the lows of that day hold? That position may be the start of how we rebuild our investment portfolio. All right. So that's all I'll do. I'm doing today. Two thoughts before I got to make that phone call before the market opens, and we'll start working together. I'm going to keep this live stream going all day. If you find it helpful, don't forget to hit the like button, share it with people you think deserve it. I mean, we're not working with everybody here. We're trying to work with the right people where we're all collectively pulling on the same oar and helping each other out. Okay, that's what we're trying to do on this desk. It's a virtual hedge fund desk. You're a portfolio manager on the desk. You're following me on X at Brett Rosenthal on X. Go follow, go share this link. Okay, bring people in you think are worth it. Two thoughts before I take a break for a minute. The first is physical gold. This is a position we still have in our portfolio. I know there's a lot of people in a tizzy. Oh, gold's going down. Take a look at gold. Is gold really going down? Gold's not even at the 50-day moving average right now. It's not even at the 50-day moving average. I can't wait to double my physical gold position. Let me just tell you that right now. On the 50, I'd like to do it on the 50. I own Sprott physical gold. There's many ways you can do this. You know, I own gold coins. I've owned them for a long time. All right. But when I make investments in portfolios, it's Sprott physical. And what I'm looking to do is to buy this on weakness. If we get any more weakness, it's really, it's a really strong look here on Sprott physical gold. It's coming down because there's just mayhem right now. But I think we come out of this and gold's even stronger, obviously. This is a massive uptrend. So this is like I'm chomping at the bit to double or triple my physical gold position on weakness. And 2 days worth of selling is not really weakness. So I've got to sit tight here. I wanted to swing over. I just couldn't help myself. Okay. I promised I wouldn't do it. And then at the end of the day on Friday, I bought puts on MicroStrategy. I'm up right now, but who knows? I could be down by the end of the day. But the world falls into two categories. Either you think Bitcoin is a store of value, or you think Bitcoin is a risk-on asset. And if you think Bitcoin's a risk on asset, you have to ask yourself, well, why isn't it going down right now? It's been unbelievably supported. So the jury's still out. This is not a debate or an argument that Bitcoin. So let me start there. Because those of you who know me think that I'm a Bitcoin bear, but I'm not. I've traded Bitcoin profitably. I'm happy to go out there and get long Bitcoin again. I am amazed right now. I was amazed that Bitcoin was holding above the 200-day moving average. That was shocking to me. I'm always in the camp of Bitcoin's a risk on asset. The market's imploding. Bitcoin's going to collapse. That's my base case scenario. It's not gold. That's my base case scenario. Okay, I come from being a gold guy, so you can understand why that's my base case. But I have been very impressed with Bitcoin's double bottom above the 200-day moving average, right up until Friday at the close. And I said, what am I talking about? There's no way this asset is going to stay above the 200-day with the market collapsing. They're even getting to gold. They're going to get to Bitcoin. It doesn't mean Bitcoin's a bad idea. It may still outperform the NASDAQ 100. It may. So in that regard, it's a store of value, better than the NASDAQ 100, you can argue. I'm not going to debate that today. But at the end of the day, Friday, I said, I won't be able to live with myself if I don't have a short position on MicroStrategy, because somewhere deep in my bones, I can't help it. I believe part of the reason why Bitcoin has levitated to this point is because Michael Saylor's executing a strategy where he is tapping debt markets, raising billions of dollars, and supporting the price of Bitcoin. That flow of capital, that window that he's been tapping, slammed shut last week. There will be no more convertible debt, preferred stock that he's going to be able to issue in this market. Junk bonds breaking down, right? Junk bonds are starting to collapse. Okay, that's a calamity for the stock market. If junk bonds keep doing that, forget about it. I mean, this is like the same type of scenario we saw in 2000, in 2008. Forget about COVID. That was a joke, right? That was just a pandemic unto itself. But so I'm looking at 2008, 2000, even the Asian flu crisis. That's not the flu. The Asian crisis in 1998, when long-term capital management went bust. Okay, these are the things you have to be looking at and doing some research on. Go ahead and gronk those 3 periods of time. Okay, high yield debt's imploding. MicroStrategy can't access its flow of capital anymore. So I couldn't help myself. I had to buy some puts there. I think that thing's going down. And if this sell-off gets bad enough, that thing goes down a lot. That's my opinion. So I said, okay, all right. If I'm going to have that opinion, like Stanley Druckenmiller says, stock market's about not right or wrong. It's how much money you make when you're right and how much money you lose when you're wrong. Coming out here and saying, I think MicroStrategy is going down and not making any money on it, that's a dime a dozen. You can find those guys all over the place. All right? So I had to put some money where my mouth is, and I put that position on. We'll see what happens. Guys, I look forward to working with you. We'll get started in 7 minutes. I'll answer those comments in 7 minutes. 9:30, I'll be back live. I'm going to leave this stream going. This is our day trading screen, so we'll be looking at that this morning. And so I'll see you in 7 minutes. Don't go away. Okay, ladies and gentlemen, here we are, and they're off, down about 4%. So we're looking at pretty much where the market was overnight. NASDAQ overnight was down 5%. S&P was down about 4%. So right now, NASDAQ's down 4%. S&P's down 3 3/4. The market had rallied when the story came out that the Fed's going to be having a closed door meeting at 11:30, and now it's sold off. I go like this because if you were around in 2008, you'll remember multiple closed door meetings with the Fed. Okay, and while some of those multiple meetings might have led to a 2-day rally in the market, I mean, that can literally happen at any time, guys. So if I sound too bearish to you, please remember that doesn't mean I don't think the market can't have a face melting rally for 2 days. It definitely will. It could be today. All I'm doing is focused on that one trade. This is very simple. I'm just watching these charts here. You're looking at 3-minute charts right now. This is every bar is 3 minutes. That's our day trading a time frame. If the S&P gives me a risk on entry point using our strategies, I'm going to put money to work. Now, look, I got my ass handed to me on Friday. I'm going to be very honest with you. It was a very tough day on Friday. Market's down 5%. I was down 1% carry trading. I mean, okay. I mean, there's going to be some days like that. But I'm trying to do something bigger here. I'll try to do a little better than I did Friday. But I'm going to be out there putting this S&P trade on because one of these trades is going to be a face melter on the upside. We could make our whole year in 2 days on a face melting rally in a bear market. So the reward is worth the risk. I'm going to be out there putting trades on. But I go back to the closed door Fed meeting. I wouldn't put too much emphasis on a closed door Fed meeting because they had all kinds of closed door Fed meetings in 2008. The market just kept rolling lower. This is the year 2000, 2001. This is the year 1998. This is the year 2008. Some people are talking about COVID pandemic. This is not the COVID pandemic year. But for the sake of this conversation, or the comment I'm about to make, let's throw in the COVID year, okay? The only thing that's going to stop this is a Fed coming out, not having a closed door meeting, but coming out and saying, we're cutting 50 basis points and we're buying ETFs. That's what they did in COVID. Remember, they came out and said, we're buying bond ETFs, something they'd never done in history. They started buying corporate bonds, LQD. Remember? Investment grade bonds, the Fed started buying. The bottom was in. 2008, they tried all kinds of different shenanigans, but didn't commit until March of 2009. And that market bottomed, right? 1998, all the big banks and with the leadership of the Fed got together on a Sunday night to bail out long-term capital management, and that stopped the Asian crisis. So if you're asking me, when do I have to put money to work? You don't have to put money to work guessing if the Fed's going to do something. That just loses money, okay? People guessed all through 2008. So that doesn't work, okay? You don't shoot till you see the whites of their eyes. But you better believe it when you see the whites, is what I'm trying to say. I remember March 2020 during the pandemic, Fed comes out, says they're going to start buying LQD. And everybody was like staring like, well, what do we do with that? And those of you who were trading with me, I was imploring you. We all did it. We got to start buying everything in sight. We made a lot of money in 2020. You didn't have to be, my point of this conversation is you didn't have to be in front of the Fed. You just had to react to the news of the Fed. Even if the market was up 2% at that moment, it didn't make a difference. Capital to work. Bang, it was going like this. Do you see what I'm saying? You don't have to guess the bottom. You'll see it. You might pay up for it that day. Market could be up 2-3% that. Okay, I don't care. I'll pay up 3% that day when I know the Fed's adding liquidity. Right now, if you remember, I shared with you a chart last week. Right now, the Fed's reducing liquidity. They're doing quantitative tightening all through 2025. So we've got layers upon layers of bear. We got bear paw prints everywhere. People want to complain that it's the Trump tariffs. And if that just wasn't there, market would be okay. And I say that is totally incorrect. The market was breaking down because the AI bubble was bursting and the Fed is reducing liquidity. So when the Fed's reducing liquidity from the system, market can keep going up for a while, but it's very fragile. It's a house of cards. And then something happens, starts going like this. And then you throw the accelerant of the Trump tariff, and it's just exhibit A, the market's crashing. Okay? So, questions. Some of you guys have some questions. Let me see what the questions are in the comments. I'm happy to answer. All right. Don't forget, share this link. Okay. Go ahead and hit the like button, right? If you want to help me out and help out your friends, hit the like button, bring people into this discussion. I'm happy to help anybody right now. Look, normally these live streams are closed for ARMR insiders only. And they've been kind enough to allow me, I say that tongue in cheek, to share this today with you. We shared it with you on Friday because we all, at the end of the day, look, we're all trying to build a community where we're sharing information and helping each other out and pulling on the same oar. And now is the time to help everybody, right? Because the market's crashing. So what do you do during a crash? And so I'm opening this up to all of you. Go ahead and share it. Bring people in that need help. I'm happy to chat with them. Okay. You can follow me on X at Brett Rosenthal on X. Okay. Having a little bit of problem with the computer. I hate when it gets wonky all of a sudden. That's the other thing about trading today. That's if we put day trades on today, you absolutely have to respect stops and very tight stops more than ever. I'm going to get to questions in a minute. Mark, I see your question. I'm going to get to it in a minute. But I do want to say this. If we're going to day trade today, first of all, it's indexes only and it's S&P only for me, okay? If we're going to do that and the trade reverses, you have to get out of Dodge immediately. There's no waiting for the end of the 3-minute bar, okay? We have to get out immediately. And the reason is we're one step away from lock limit down, markets closed for 15 minutes. And we do not want to get caught in that halt. So I respectfully suggest if you're new to this, don't carry trade at all with me today. If you're going to try to carry trade with me today, you absolutely have to follow stops religiously. Carry trading for me is getting on a rip. If the rip's not happening, I want out. Sometimes I'll miss the rip because I got out too soon. I don't care. I need to protect my capital. And that's doubly, that's 10x true today. Okay. And when my computers get wonky, that makes me nervous. My trading platform is working great right now. I use Interactive Brokers. Okay. And the screens that you're watching here, that's TradeStation, but that's just for my charting software. So Interactive Brokers usually holds up the best, but we're going to get some announcements that Charles Schwab or Vanguard or Fidelity or whomever, system down, not working. And what we don't want to do is be stuck in a trade when that happens, right? That's just like your head exploding. So be very careful. Position sizes should be smaller. Respect the stop. That's what I'm talking about if I get on a trade today. All right, Mark, about the time the risk monitor went red was reading articles about shorts by the large institutions. There's a lot of money in the hands of folks who don't like the president. I've read those stories, Mark. Respectfully, I think the conversations that some wealthy cabal on Wall Street is crashing the market to get back at Trump is utter and total bullshit. There, I said it. Okay? That's my opinion. Conspiracy theory ridiculousness. The market is crashing. First of all, it was selling off because the AI bubble had already burst. I told you guys back 21st February, I shared with you, look, this is the year 2000 all over again. I lived through the year 2000. It's the same story. I remember it. And it's exactly, there's so many similarities, ridiculous. This market was going down no matter what. In 2000, it dropped 40% in 2 months. Trump wasn't around. There was no tariff conversation. It was a Fed that was reducing liquidity. Back in 2000, Fed reducing liquidity. Remember the famous over-exuberance conversation from Chairman Greenspan? Fed was reducing liquidity, and its dot-com bubble was bursting, and in 2 months, the NASDAQ 100 dropped 40%. Without any Trump, without any tariff, without any cabal. I think people forget that markets crash. They do. They go through these periods. And I'm hearing the same thing that you're reading, Mark. Oh, yeah, there's some cabal that's crashing the market. The market's crashing right now because the Fed's reducing liquidity. It's been doing it all year. I put that chart up on Friday for you. The AI bubble's bursting. I shared that with you. You can go to my YouTube channel. There's a 3-minute video I did like March 3rd or something. I shared it with you. The CEO of Microsoft told everybody in that interview that while AI is a lot of fun, he sees zero return on investment and he's pulling back. NVIDIA is going down on that story alone. It's got nothing to do with Trump. It's going down more, market's crashing more because the tariff is an accelerant on what was already happening in a backdrop of a Fed reducing liquidity. And the risk monitor told us that right at the top. It's not even useful to talk about some cabal. We're not part of that cabal. We're never going to know. So how do we run money? Worry about a cabal all the time, right? We just got to focus on what we know. Okay, this is the first carry trading entry point. And it didn't work on Friday. It was the same setup Friday. And it cratered. I don't know if it's going to work today. There's going to be a lot of yellow bars that you see show up. And at the risk of missing a rally, sometimes I miss a screamer that closes the gap, and it makes me really annoyed. But this market is just, I don't know, I'm thinking about it. Market opened, it opened higher, it went down and tested the lows of overnight session, and it's bouncing off of that level. Gap down Monday. All right. All right. The next, I may regret this because sometimes there's an early morning trade that skyrockets, but I'm just not putting that trade on today. So I got chewed up a bit on Friday, trading too many entry points. And so I'm going to not trade the first half hour today. I'm more interested on days like today when a real turnaround begins. I'm more interested in trading that hour-long consolidation, or if I look at my playbook, like a 1230 entry point, a 130 entry point after building a base that kind of flatlines for a while. That's the high probability trade. But it is true that sometimes Monday morning gaps reverse and skyrocket. So I think I'm just going to have to be content to miss that skyrocket. What I would look to do really is let it rip higher, pull back, and I would look to buy the first pullback. So if it can make a higher low, I would be more interested in playing it. I may regret that today. All right, let's go on to the next question. You mentioned 3 time periods events. This is Superior Upland Property Services. You mentioned 3 time periods events. We should gronk for historical perspective. I was on a call and wasn't able to jot them down. Aside from 08, what were the other 2? Oh, yeah. Okay. The other 2 were 1998 Asian crisis and the Asian .com and the .com bubble of 2000, 2001. So if you wanted to get some historical perspective on the type of market we're in right now, 1998, which was rescued by the big banks and the Bank of New York, they got together and bailed out a hedge fund that blew up, executing a carry trade, actually. Here goes the market. Shoot. This would have been a good trade if I could have gotten on. I would have been booking some profits right now. I can't, I'm not doing it today. I'm not doing the first trade of the day. You know, what's weird is treasury bonds are imploding. Now you can't even get treasury bonds to go up. That's why I'm not long treasury bonds right now. I tried it on Friday, but I decided not to hold it because it just isn't working. And you figure if there's going to be a trade dispute, one thing in the arsenal of foreign central banks is to dump U.S. treasury bonds. Fitz put an idea into the room about assets that might benefit from the collapse going on in the technology space. Fitz, and one of those groups, which was interesting, was cybersecurity. And look at CrowdStrike up today all by itself. CrowdStrike, I mean, Fortinet is up almost 1% all by itself today. That's interesting. I like CrowdStrike, but I mean, it's cratering here. We've traded it before, as you can see. It's the morning rip. That was the first setup of the day. See how high I can go. Right now it's at the ATR high of the day. So if I was mapping this out and I would, this was the first bar to buy right here. Whoops. And honestly, I always sell something at the ATR high of the day. So I would literally be selling some right here. And that's kind of part of why I'm not putting the trade on. Although, I mean, look, there's some days that it just blows through the ATR high of the day and keeps on going. So the ATR is the light blue line right here that's come down, down, down. So normally the ATR average true range goes straight across. But what we did was we took that ATR calculation and infused it with top day, multi-day volatility. And so it moves the ATR around. And it's come tight around the VWAP, which is a very explosive pattern. If you break out on top of it, it can really run. Conversely, it could break down below it and it breaks down. But you can see the ATR low is popped up today, and that's a very bullish sign. So I think there's more on the upside here in the market. The next location where I would sell some would be up here in the fourth fib up on the day, Fibonacci extension. The fourth fib up from the opening range high would be the next target. And this is also, this orange line is the third standard deviation below the ARMR moving average. So we opened up way below it, and we're going to come back up to that line is what I think is happening. Talk to me. So Dad's talking about precious metals. Got some interesting thoughts there on precious metals and margin calls. Obviously, bringing down gold and silver is actually going to be a good thing for us. I know we want to get long those stocks again. And look at the stocks right now. Wheaton Precious Metals is up on the day. Dumont. These are our favorite names. Franco Nevada, Royal Gold, wild volatility down to supports, down to moving averages, certainly bouncing off of those levels. And then the gas goats are coming back, right? Here's EQT according to Ares, bouncing off. RRC. The only problem is these patterns are just completely blown out. So there's nothing for me to do on these patterns, but it is good to see some of these names bouncing, and I think you would expect it. Semiconductors is up right now. It's just been a brutal sell-off for the semis. They're bouncing a bit. Boy, they had AT&T down huge today. AT&T's back. There's only two stocks I'm holding in my dividend portfolio. I'm still long AT&T, and in all fairness, I'm long at 14 and change back here. So I'm still collecting my 8.8% yield that I locked in down here, and the stock's doubled, or not anymore. It's not doubled anymore, but gave up that had already doubled. So I'm just not selling that one. The 200-day moving average is my stop there. I'm going to hold that, and I'm still long the pipelines for the same reason. I own them, back here, and I'm collecting a large yield on that. So that selling looks insane to me. If anything, boy, I'd probably look to increase the size. I mean, the key to owning the pipelines is to buy them at the bottom of the channel. So I'm not buying them today, but on the way up, I tend to buy the bottom of this channel. And so they just crashed it down to the bottom of the channel. It'll set up a pattern, and I'll probably increase my position size somewhere down here is what I'll be doing with that. And again, I've been on this trade for a couple of years. So it's not a trade, it's an investment. And those are the two positions that I maintained in my dividend portfolio. Okay. Yeah, pullback that holds at a higher level would be the first trade I'd be willing to take today. So it's rallied up. It comes back down. You can see the ATRs are tight around the VWAP. If that location holds, so one down bar, another down bar, if we got one, that would be nice if we got one. Back on top of the VWAP and the ATR, that would be the next location to actually buy. Not sure we're going to get there, though. While we're watching this trade this morning, I'm going to take a moment to say I already missed the Gretzky era. You know what I'm saying? I mean, that's just me. I miss the Gretzky era. I liked Wayne as the face of hockey. My son and I were watching the festivities after Ovechkin scored that goal to replace Wayne Gretzky as the player with the most goals in history. And Levi's like, "How old is Gretzky? He looks like he's in his late 70s. He moves so slow. He's so stiff." I said, "Son, that's from years of getting beat up in the NHL, man, because he's only in his 60s. He's like 64 or something." I was like, that's what happens when you get beat up. And when Wayne Gretzky played, let's be clear about this. When Wayne Gretzky played, that was a brutal gladiator time in the NHL, and he still put up those numbers. The clutching and the grabbing alone makes Wayne Gretzky going to be the greatest hockey player in history. Can you imagine how many goals Gretzky would have scored if penalties were called for clutching and grabbing? I mean, they did everything they could to give Ovechkin all of the space possible for him to fire his cannon from the right face-off dot. Right? On the off wing there. So he was on the left wing. I mean, they did everything they could to give him the room to fire away and score all those goals. Wayne Gretzky had to fight through unbelievable amounts of abuse to put those pucks in the net. And that alone means that guy's the greatest ever. Have you guys ever seen the video? When Wayne Gretzky was a young guy, just got into the league. Maybe he was 20, 21, I don't remember. He's lighting up the lamp everywhere. And they were playing the LA Kings. This will crystallize my point. They were playing the LA Kings, who were a terrible team at the time. And I think it was Tiger Williams. Remember that guy? Just a real dirty player. I mean, he was like one of the worst, most dirty players in the NHL at the time. Tiger Williams. Was it Tiger Williams? I think it was, right? Someone correct me if I'm wrong about this guy. He was an enforcer playing for the Kings. Wayne Gretzky scores like a beautiful, unbelievable goal. Do you guys remember this? I know Minnesota. I know you remember this. You've seen this video. Maybe you saw the game with me. He scores this incredible goal, and Gretzky's skating up the ice with his arms like this, going, "Yeah, I just scored an incredible goal." And Tiger Williams, I think it was his name, skated up to him and cold cocked him. I mean, Gretzky was out on the ice. It was crazy time in the NHL. And he put up all those goals. He wins. Wow, big down move there in bonds. They're just killing bonds. But of course, it's really just a reciprocal of the market. It's a big up move in the market. Oh, what a bummer. Should have had that trade on. There's the gap close. Oh, shoot. Okay. Okay, that's fair. I'm still talking hockey because this thing blew out and I'm not on the trade right now and there's no trade I can get on. So I'm still talking hockey right now. And so an Armor Insider reminds me that you can't discount the fact that Ovechkin had to shoot on goalies with much better pads, and so the goalies are definitely different. I'll give you that. I don't know about the trap so much. I hear what you're saying, but I mean it's not the same as the kind of clutching and grabbing and abuse that I thought Gretzky had to suffer through. But I'll give you that. The goalies are definitely better now. But then I would argue at the same time, Kevin, look at the stick that Wayne Gretzky had to work with, like a metal Easton stick, or regular wood. So you want to talk about goalie pads and bigger goalies or whatnot. And I'm going to say to you, Ovechkin has a howitzer they put in his hand that Gretzky could have never got a chance to play with. I mean, the sticks, I know you know this, the sticks are unbelievable. The market's gone berserk, and I'm not on that morning trade. Well, I'll have to look for the next one, guys. That was the setup this morning. Oh, dear. I had to be a little more aggressive this morning. Good for you, Fitz. Good for you. They canceled Black Monday, I just read. So the market's up huge because there's a story hitting the tape that Trump is considering a 90-day pause in tariffs. For all countries except China. There's the story. Thank you, Eris. The probabilities are definitely in your favors on that one, Fitz. So that'll put a nice bottom in the market right there. What was that? 2 standard deviations below the 200-day. Nice reversal bar there. And we'll probably have some gaps to fill now. See how this day plays out. Okay, so some wild volatility, and I have this like sneaky suspicion, that here comes the denial. Markets are trading. It's a very hard market to trade. There was that entry point this morning. We talked about it. And I just wasn't going to trade in the first half hour. But at the moment, I'm looking at screens that are very disjointed. Some aren't even printing. Like the print doesn't happen, and then it's a gap. So I'm content to stay out of this for now. If something shows up later, I may do something. My comment right there was wait for it. Wait for it. There's a story going to hit the tape of denial of the story that Trump's considering mulling a 90-day window. Wait for that to hit the tape any second now, because that seems to happen constantly with Trump and the news cycles for Trump. You get a comment that comes out of one part of the White House or whatever, and within like 30 minutes, another part comes out and says, that's totally not true. That report wasn't true. Somebody else put that report in. We didn't say that. When you get on a trade like that blows out and you have a huge morning, you book that profit, you're done with it. That's what I would be. They just halted Palantir. The market's not okay. Look, it just happened. I didn't even have to wait that long. What didn't even need an egg timer for that one. The story is hitting the tape now. CNBC reporting that they're still working to confirm that Trump is considering a 90-day tariff pause. That didn't take very long to hit the tape. You could trade the market, but you better not be greedy. You make your money, you got to get it because then things get halted and the next story hits the tape. That's 100% true. This is why I don't follow CNBC. I don't watch any of those channels. I think they're a complete waste of time. So now the market's crashing back down, and I'm not even getting good prices here. Like this, you see this chart right here is not moving. That's not normal for the S&P. I mean, we know the S&P is moving. So I don't, something very, it's not trading right. The charts are slow. It's almost like the market's trading too fast for the charts right now. I have two different workstations running, and it's like, see, like this workstation is slower than the other one. This is weird. So I'm on different servers. Market's already down here, and then it's back up to 502. I don't know. It's pretty crazy. The charts aren't updating. They're way behind. Another way to look at this is that, I have a carry trading playbook, and that playbook is built on the fat part of the bell curve. Normal volatility. These are the trades that make us a lot of money. We are on like the very end of the tail. So a lot of the way I trade is not built for this. And you could argue, I'm content to stay away. So if I see something that I'm willing to try today, I'm going to try it. Position size is smaller and all that. But if you're wrong on a trade today, you're going to get blown out of the water. It's not a normal trade. So if you guys are trading with me, all the trading experience we have together, you got to put over here. That's totally different than the market we're dealing with right now. Totally. You throw everything out the window that we know. And so if you're going to trade, I don't, looking at the way the market's trading right now, other than that awesome trade this morning. So if you got on it this morning, you made a lot of money, that's great. But other than that trade this morning, I'm not getting normal prices right now. The market is like gapping through prices. So if you think you have a trade on with a stop, you can forget about that because the market's gapping through stops, and you're not going to get filled anywhere close to the price you think. And so it's an almost impossible day to trade if I can't be comfortable that the prices I'm looking at are actually prices. I'm watching it trade here on 3 different servers, 3 different networks, 3 different trading platforms, and none of them are agreeing. The one that's the best over here is my interactive brokers. That seems to be the most accurate. That really is the best. The others are like, they're all over the place. Of course they catch up, but I'm saying the one that's most accurate on a second by second basis is the interactive brokers, which now the market's down 1 1/3%. So in case you're following along at home, the theory we use when we see these 3 black lines, these 3 black bars, when they happen at the end of a move, so we bought it here and it goes, right? When you take out the low of the 3rd black bar, the trade's over. So theoretically, had we been on a trade together, trade number 1 would be over right there. Okay, so I'm just going to map it out so we know where we're at. And trade number 2 would start. So I would have sold some as it blew through at this yellow bar, at that yellow bar, I would have sold some. But I mean, I don't know, it blew out. So maybe I would have done better, but that's where the bar is. And then on that reversal, I would have been out completely. So now a whole new trade could set up. Look at the ATR low of the day skyrocketed up here. And in theory, the market should have stayed. None of these things, honestly, the theory you can throw out the window right now. This day is not designed for armor carry trading. And that's kind of what has me just, I'm going to be content in cash for a little bit. If I see a setup, don't be surprised if I take it, but I don't really have an interest in trading right now. I'll be back in a second. All right, this is the next location for a trade, which would be the VWAP. Can it hold the VWAP in that third standard deviation below the ARMR moving average? Is usually where we get a good, good entry point. So we broke below it, blew above it, come back and test it. EU aims to offer Trump removal of industrial tariffs. Business groups are going to challenge Trump's ability to do tariffs in court. Bonds trying to hold the ARMR moving average. Let's go take a look at bonds. Bonds are just stuck in that area. I don't know what to do with bonds. High yield headed lower. Ha, 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 ha. There's the story. I mean, this thing write itself. White House tells CNBC that report of Trump considering 90-day pause is fake news. All right, now let's see what the market does with that. If the market makes a higher low, then I'll get bullish. I mean, could write this. This is ridiculous. This is like a complete, God, I love Treasury bills right now. 4% on Treasury bills? I love it. Give me all the Treasury bills you want to shovel my way. I'll take them. Yep. As I was saying. What a clown show. I mean, what a clown show. Oh, yeah. I'm not going to go short, but boy, that was a short moment right there. Give me more MicroStrategy puts. Oh, dear. No, seriously. So the real takeaway here is that are we at a tradable bottom? So a bullshit story blows out. Okay. Then the fake news story and it comes down. We make a higher low. That might be worth a trade. Oh boy. Oh boy. Here we go. Loaded up on the micro strategy puts. Just for my trading account. Just for my trading account. And it's true. Kevin reminded me that I said to you guys, I looked at my P&L, which I suggest everybody does at the end of every year. I do it at the end of every 3 months. But at the very least, you got to go over at the end of the year and see where did you make all your money for the year and where were you giving it all away? And for me, my options trades just were an embarrassment last year. Yeah, I keep it real on this desk. I tell you when I make the right call. God knows I've told you over and over again how great that risk monitor red was. You're probably sick of hearing it, right? So I'm going to tell you when I do horrible things, right? That's why this is just an honest and open discussion of how I run capital. And so my options trades were just god awful last year. I was embarrassed. I looked at my turn. I was like, I can't believe I lost that money in options. It's ridiculous. So I don't really want to trade options. It's not my strength. You know, we gotta all we can do is play to our strengths, right? That's what we got to do. Figure out what your strength is, focus on that, avoid everything else. And then I went out there and bought. That's not my strategy. I couldn't help it, Kevin. I couldn't help it. I just had to have something, something. And there's no way I'm going to short MicroStrategy. I don't short individual stocks. I only short ETFs and indexes. So, because I just can't sleep at night short an individual stock. It's just everyone has to know their risk tolerance. I can't tolerate that risk. I can't tolerate the risk of the unknown loss on a short. You buy a stock, the risk is the amount of money you put into it. It goes to zero. That would suck, but that's your risk. You short a stock, the risk is unlimited because you have to buy that stock back and give the shares back that you borrowed. So I just can't be short an individual stock because I don't know what the risk is. But I'll own puts if I want to put on a short position on an individual stock. I'll do puts because I know exactly how much I'm willing to lose. And whenever I buy puts, whatever the position is, I've already said in my mind I'm willing to lose that money. No, I'll be okay if I do. And if it ever works, I'll make a lot of money. But most of them don't work. So take that with a. When you hear me talk about it, I thoroughly expect to lose money on these puts. But anyway. So do we try to trade a 3-bar reversal that sets up a higher low? Right on top of, we went below the VWAP. So on a normal day, if this was a normal day, I would say to you that the last line of defense today is going to be down here. This is the ATR and the first standard deviation below the VWAP and the opening range high. Like that's the last line of defense. If the market gets down to that level and puts in a reversal, that might be worth taking a shot at. Because if it takes out that low, market's toast. It's possible it holds this third standard deviation line. This would be a 3-bar reversal right here. Down below the line, middle, the next bar is in the middle, inside bar, and the third bar takes out the high of the breakdown bar. That would be, your first possible setup. But again, I'm sharing with you information from a day trading playbook, and this is outside the bell curve. So this is just not a normal day. And so I can't jump at everything that I might jump at on a normal trading day. So I'm just sharing with you, what would I do? What trade would I put on? If we come down to that green box that pale green box, and set up a pattern there, I might give that a shot. Today is almost a news-driven day. Like, as soon as the news hit the tape that Trump, that it's a fake story, you could have bought the market when at the end of that 3-minute bar. It went down on that story, and I just don't trade that way. But now the next piece of news that comes out will be somebody else saying, yeah, that's true. He's not considering the 90-day halt, but he is considering this bullish thing, and the market will rip higher. It's just an insane day. What's your posture now, Fitz? What are you doing now? You hit that trade this morning. What's your next look? Or are you done for the day? Nice day for gold stocks, even small cap gold stocks. Sitting on your hands right now? That makes sense. Sitting on a fat stack right now. Honestly, Fitz, if I were you, you're free to go. I mean, it's a beautiful day down here in Florida. I'd go to the beach after hitting that morning trade. Why screw it up? Ooh. All right. Well, if it's raining, I guess you may as well stay with us. It's too much fun today, right? There's just too much crazy action. It's hard to leave the desk. New story hitting the tape every few minutes. Now the EU says it wants to prioritize negotiation with the US rather than tariff reiteration, whatever that means. One say it's a positive, negative story, then it's a positive story, then it's a negative story, a total crapshoot right now.
Order filled.
You could have on a trade right here. Stop's got to be tight. This was the 3-bar reversal, and that was the bar that closed back above the VWAP. You would have it on right here. Stop would be right below. Right below. I mean, literally wicked tight. It has to go up or you're out. 502.93 stop.
Order filled.
Guys, I just want to be clear today. I don't think, normally I put into the Slack room, carry trade. This is the entry. This is the stop. This is what I'm doing. You're not going to see me put any carry trades into the Slack room today. If I'm trading today, it's got nothing to do with a carry trade. It should not be considered part of how we carry trade. I wouldn't look at really last week and today and for the foreseeable future. When we're on the far end of the tail of a bell curve, these aren't carry trades. Okay, we're way outside the playbook. This is not volatility we normally trade. This is wild volatility. Okay, so if I was to use my results of trading the last few trading sessions and then the next few, and have that change how I carry trade, that would be a mistake because this is a whole different data set. Okay. And so if I'm putting trades on today, it's with a different mindset. I'm trying to harvest some alpha. I've got 90% cash everywhere. I can put on an S&P trade. If the market skyrockets, I might hold it overnight. You follow what I'm saying? That's not a carry trade. So I'll tell you via this microphone what I'm doing. I'll tell you if I'm going to try a trade, and I'll even mark up the chart for you. But I'm not writing in the Slack room, this is a carry trade, because none of these trades today are a carry trade. So anyway, this is like a location setup. I wanted to see it come down into this green box. It didn't make it. Okay. And so it's trying to put in a little bit of a move here. And it may be something that I try to get on simply to have some exposure because of I'm looking to get on a trade here if the market wants to continue rallying. Maybe I have on a trade. So it blew out. This was the first trade of the day, which I didn't take that, right? Then it comes down. It sets up a little reversal pattern. It ended up being here where the reversal pattern was. Okay. That was the reversal pattern. And then this bar really was the bar to buy. Oops. This would have been the bar to buy. Okay. So the end of that bar is right up there. I would be more interested in putting that trade on if it got down here. So it does this, it comes up, it comes back down, it sets up, maybe it's another reversal pattern at this line down here. That would be more interesting to me. But I don't know. I might be on a bit of, I'm looking at the 1 minute chart saying I could be on a trade here if I want. This could be one of those days where it rips, pulls back, and then rips again. Maybe I do that. So I'm just kind of highlighting locations for you. And I almost feel like every man for himself. It depends on the type of risk you want to take.
Order filled.
You know, by having a position on here, if we do that, we're simply saying, look, that we're going to harvest some alpha from last week's collapse when we had tons of cash. That's what we're doing here. If you put a trade on, takes out that red line, very tight stop. We don't need it. It goes back down and it starts to, make a double bottom or something else happens. But that's why we would do that here. Yeah, and Richard, we're going to get those stories constantly. We're going to get them constantly. Which is now the EU is talking about cutting some type of good deal, blah, blah, blah. And I think the biggest issue from, I don't know, I'm just spitballing with you, but I think the biggest issue is US-China. So if there was like a China story that China wants to sit down with Trump and figure this out, that would be really bullish to me. That would be a needle mover. If China comes out and says, screw you, we're going to devalue the Yuan, which they've been wanting to do for a while anyway, it doesn't make a difference what the EU is going to do. That's my opinion there.
Order filled.
There's your line in the sand there if you're going to be on a trade here. Can't go below that bar. Goes below that bar, the trade's over. There, that crystallizes my thought there. The market moved 8% in 30 minutes. That's not Dogecoin, right? That's not some type of, small cap, micro cap, stock it's the S&P that moved 8% in 30 minutes. That's not a carry trading market. You know what I'm saying? That's an insane market. You would be out of the trade, by the way, if you were in it right here. I'm not telling you what I'm doing today, guys. Everybody got to be on their own, doing their own thing. I'm just highlighting on the chart where locations are, trade it how you see fit, or don't trade it at all. And you can't wait for the end of the bar, by the way. Not on days like today, where I usually wait for the end of the bar. That trade would be already out if you were on it. Particularly on that median bar reversal to the downside. So that would take you out of that trade. Some of these trades I'm on, I sometimes book them real fast. So I'm marking up the chart for you where trades are. Some of you are going to take the trade. The ones whoever took it this morning made a lot of money. This trade right here, you might be out already. If you were on it. So, and when you put the trades on here and it goes up a little bit, you have a decent gain. You can book your profit whenever you want. The trade I'm more interested in really is down here. If it makes a double bottom and holds a higher low, and we're in the afternoon, and even then, I'm not going to be on the desk telling you what I'm trading today, because in honesty, I hope I'm making this clear. I don't think anybody should trade today. If you're trying to, it's totally outside the realm of carry trading. The market just moved 8% in 30 minutes. You can make a lot of money on a day like that, but you can't be using the type of thought process that you use on a normal trading day. I'd like to know when Fitz puts his next trade on. Hey, AT&T is up now. It was down 7% this morning. What a market. Wow. You could almost say that's a flip short right there. Anybody wanted to be crazy and short. That's the blowout. That's the failed recovery. Boom. Who wants to try a treasury trade? One way to play the short side is to get long treasury bonds. Whereas I'd take it a step further. I'd take it a step further. I know, Fitz, that is a problem. And so if you're talking about, is that Think or Swim or is that Trade Station? I don't know, whatever it is, Fitz. What Fitz is saying is he just wants his damn platform to function correctly today. And that is a problem, Fitz. It's part of what's keeping me out of trading right now, because Interactive Brokers is working, so I certainly could trade, but we're getting gaps in prices. And so believing that we have protection with a stop is very dangerous today, because a news hits the tape and the S&P is $1 lower. Like, you might have thought, oh, my stop's 20 cents. Bang, you're what? You've just been blown out of the water. So if I'm trading at all today, it's a quarter or a third of the money I normally trade, because I have to account for the fact that there just could be a trap door that opens, and I'm getting blown out $1 lower than where my stop is. So this is an argument to not trade today. Yes, there was an unreal trade this morning, so should have been on it. But I'm just saying, bigger picture, you get chewed to pieces in this market if you're not careful and you're using the wrong position size. So be careful. And you didn't even need a big position size this morning. I probably, in retrospect, obviously, because it went up, I should have put on a trade today with a quarter the size. I mean, okay, my risk isn't that big, and the quarter would have made me a fortune today. So position size is the key. Oh, you're on TradeStation with me, Fitz? Excellent. I love that. I didn't know anybody else used TradeStation. I think it's just you and me, Fitz. Fitz, have you ever tried calling tech support at TradeStation? It's a real hoot. You can't get anybody on the phone. They might want you to email them and they'll get back to you. You got to be a coder. You got to be able to do your own work. You can't trust or count on anybody at TradeStation. Yeah, right. I mean, you can't, because you can't get anybody. You got to be able to do everything yourself. And I guess Grok makes it easier for us, Fitz, right? Because if I do have any coding issues now, I just throw it into Grok and ask it a question, and it shows me how to write the code in easy language. Cut, paste, bang. I knew I liked you, Fitz, but now that I know you're a TradeStation guy, we're the two people still on TradeStation platform. There's the big down bar. What's the story? Oh, geez, I almost got short. No, I'm not trading from the short side, though. No way. Oh, but there's the bond trade. That's the bond trade. The way to trade the short side today, I think, is to get on TMF, Ares. Well, TLT. I don't need to do leverage. What do you think, Ares? There's the China problem right there. There's the China problem. Truth Social. So I sit here and stare at the Treasury bond trade, and I ask myself, how can I buy Treasury bonds if one of the things in the arsenal of China is to dump Treasury bonds? Is that possible? Would they? I mean, I don't know if that's the right hedge. Okay, look, we're down at the location almost that I'm looking for, right? That's the location. Now there's the little double bottom. You know, I would make it bigger. It doesn't have to be exactly. Sometimes we have a location and it's like you don't have to have the exact location. It could be a little bit above, a little bit below. If this is another 3-bar reversal, I'm not, I'm so used to telling you what trades I take. I don't want to do that today. I think everyone's on their own. I'm just going to highlight areas, but this was a 3-bar reversal and there was an entry point. If this ends up being a 3-bar reversal, then there'll be another entry point with a double bottom. Okay. This is a serious problem right now. Trump is ratcheting up the heat on China. So you can get all the good news you want out of Vietnam and Malaysia, and maybe the EU tries to negotiate something. But if the US and China go through a series of escalations of a trade war, all the other stuff is moot. It doesn't matter. And the biggest issue I wish to point out to you that I don't think is getting enough attention in the market is the Chinese devaluing their currency. That, I'm telling you, is going to blow up some hedge funds, and it has a ripple effect. It'll have a ripple effect. Something else will explode. It has a domino effect. So if you see that story go across the tape, I'm trying to prepare you so you understand the magnitude of that story. I feel like I didn't prepare myself or you enough for tariff day. I made the assumption incorrectly, as did most of the market, that the news of tariffs wouldn't be as bad as it was feared, which is usually the case, right? And so we had ourselves, I had booked my profit on the short side, and I was in a position to make money on the long side, which is okay. And what we really need to do is game theory it out before the news hits the tape. If this happens, then we do this. If this happens, then we do that, okay? So I really want to make an effort to do that with you guys as we go forward. So at 4:15, when Trump started speaking, I was long, we were long, SSO. And we were up big on that trade for the day. It was a day trade we made a lot of money on, which we held overnight into the conversation at 4:15. At 4:20, we were making even more money on that SSO trade. At 4:30, we were back to break even. The thing cratered, right? So we sold it all. That's great. We had a trade on, went back to break even. We got out, and the market crashed. The game theory conversation we needed to have before that needed to be, if the news is dramatically worse than feared, which I didn't even contemplate. If the news was dramatically worse than feared, not only, obviously we're going to sell our long position. That's a no-brainer. That was the first thing we did in the aftermarket. That was easy. We need to go short. That was the second more difficult decision. I already shorted twice on the way down, made money. And I told you guys I'm going to take a break here. But I didn't even conceive of the idea that it would be like worse. So we have to really game theory and conceive of all of the ideas. So when we see the news hit the tape, we can make a decision if we want. And what I'm trying to do with you right now is say to you, if you see a story hit the tape that the Chinese are devaluing their currency, the market's going a lot lower. I don't think people realize that. Hedge funds will blow up. There'll be currency FX crosses that will implode. That's my baseline scenario, right? We make decisions like Stanley Druckenmiller says. It's not a question of how many times you're right or wrong. It's how much money you make when you're right versus how much you lose when you're wrong. That's what the stock market is, right? So we make our baseline scenarios, we make our decisions, we execute, get out if we're losing money as fast as we can, and maximize our gains when we're right. That's what we're trying to do. So what I want to make sure everyone, I don't see them talking about it much, but having been through the Asian contagion in 1998, which blew up long-term capital management because the carry trade went ballistic. I mean, the real carry, I talk about the ARMR carry trade. That's kind of fun, but the hedge fund carry trade that originally was created, I don't know if this is true, but in the 90s, leading up to 1998, there was the carry trade with Japan. And what was happening was Japan was, in hedge funds, the dollar was getting stronger against the yen. The yen was getting weaker and weaker. Dollar was getting stronger. And it became this no-brainer trade to borrow yen, sell them, buy dollars, invest in US bonds, US stock market, and you were making money on both ends. But forget about the stock market. The carry trade was closer to like a risk-free trade, which it wasn't, obviously. But what they were doing is borrowing yen, converting them to dollars, so selling yen, buying dollars, buying treasury bills or whatever. And the hedge funds were collecting the yield as the value of the dollar went up versus the yen. And they were just making money hand over fist on that trade because they were allowed to leverage it because they were buying treasury bills. So it was considered, safe trade. And then you had the Asian contagion and currencies flipped on their head and the yen went through the roof and caught these guys wildly short the yen on leverage and bankrupted long-term capital management. So I don't think people remember that. Like, it's 1998. I mean, it's 2025. Who remembers that? But like when currencies dramatically shift, it catches somebody always naked. I don't think this time will be any different. So if you see that story, let's pretend, like, how would I use that information? I'm not shorting now. I'm not going to short that story. But that story might not come out for a couple of weeks. I'm not looking for it to come out today. I'm saying write that down, put it in your trading journal. If you see it, there may be a move for us. As an example, let's say the market rallies for a couple of weeks, even for a couple of days, who knows, runs back up to the downtrend. And then that story hits the tape. I would short immediately. Bang, I'd be putting shorts out as fast as I can. Now, if the market's already down big and that story comes out, there's nothing for me to do on that. If I was long a position and I start making money and that story hits the tape, I have to sell immediately. Do you see what I'm saying? So that's one thing that's, to me, more concerning than everything else that CNBC is probably talking about right now. Oh, I got some. Okay. Mark, what do you got here? Curious about your conversation at the first day or couple days of the Newsmax stock. I didn't have any interest in the Newsmax situation, and I don't normally trade. First of all, so let me tell you what my opinion is on new issues. Okay, so Mark, on this trading desk, I don't trade micro cap stocks that have zero earnings, zero revenue, zero cash, burning through cash, concept idea that somebody puts into a message board on Reddit. That is not done on my trading desk. I don't care about that money. I'll let somebody else make that money. I'm managing assets where the risk tolerance and size of capital that I'm managing, it's totally, completely unacceptable for me to put those trades on. So that's the first thing I want to say. And just so you guys know who are piping in, as a collective here at this virtual hedge fund, we're managing well over 150 million. So the information I'm sharing that goes out to ARMR insiders that we have all over the globe. We have insiders in Israel, Hong Kong, Ecuador, Panama, Argentina, Canada, US, of course, Europe. We have a huge faction of in Poland. And I love you guys. I mean, like, we are sharing information with a large pool of capital. We have ARMR insiders that have, I don't know, $50,000 or $100,000 in the market. We have ARMR insiders that have north of 10 million in the market. We have a couple of whales that have a lot more than that. Okay. So we're all sharing information here. And so it would be totally inappropriate for me to come out and even hint at the fact that I'm buying a micro cap with no earnings, no revenue, and very illiquid. Do you see what I'm saying? It would be completely inappropriate for me to do that. And so I won't. Now let's go to new issues. I love I love investing in new issues. But the investing strategy of the ARMR investing way when it comes to new issues is I never buy a stock that comes public that day and try to trade it. If I like an idea, it comes public, it's a hot stock, I put it on my whiteboard, and I'll give you an example. Right now we're looking at market surge using William O'Neill's service, okay? So here's my favorite way to play a new issue. This is a weekly chart now. This is a company called Doximity. We made a lot of money on this stock last year, okay? So stock came public at 55. It was priced, I can't remember where, but somewhere maybe in the 25-30 range. It started trading at 55. It ran all the way to 100. So right there, Mark, it tells me that it's a hot stock, right? It's a stock that every institution wanted to own. It was a very successful IPO, and I don't trade it. I don't trade it from 55 to 100. I don't care. It goes on my whiteboard, and I start to watch it for the inevitable sell-off, okay? They sell off because there's a lockup agreement that's going to come unlocked in a 6 to 9, 12-month window. And so every market participant knows that more shares, more supply is going to hit the market. Stock comes down, sets up a base, and I look to buy coming out of this type of a basing structure. And so we got on this rip last year. We made that money, actually, this money, because we didn't lose here. We made that money last year on Doximity. So I love new issues. I put them on the list. If you think Newsmax is a great issue, put it on the list. Talk to me in 6 to 9 months. And usually it's 12 months. Here's another example, Palantir. Palantir, hot new issue. Everyone loves it. Skyrockets on new issue, right? Then it goes through the inevitable decline for over a year. When it breaks the bottoming wedge downtrend, that's the time to get on Palantir. And then, of course, you could trade it all the way up. Okay? So that's how we handle new issues on this trading desk. The insanity of newsbacks was just not something for me to be a part of. It's not appropriate for the type of capital that I'm running. Okay, here we are back down right on top of this green box that I'm talking about. Okay, looking for 3-bar reversals. This is the last line of defense. The market should hold here if it's going to be up today. If it breaks back below this level, we're going to have a wicked, ugly close. So the last place, what I would consider putting a trade on, and 11:30 is my favorite time of day. I'm not telling you what I'm doing. I may or may not do it today. But I'm looking for, a reason to put some capital to work there.
Order filled.
That may or may not be this order. So don't be confused by that. That's the line in the sand that the market has to hold. Breaks there, it's over. Breaks out from here, could be an interesting end of the day. Wonder if I want to, one way to do this is to put a hedge trade on, get long the S&P and long treasury bonds. Figure one's going to break out while the other one breaks down. Maybe hedge trades are the trades for today. So I'm reading some of the messages you guys just put in here. Okay. So Fitz says, doesn't China hold a ton of bonds they could sell and wreak havoc? Absolutely. Absolutely. You know, and it would. So what will start happening is that the treasury bond market breaks down and the stock market breaks down with it. This might be one reason why treasury bonds haven't been a good place for, hedging week to week. Now it's a good place to hedge intraday. Like if this S&P trade breaks down, bonds generally break out, just like it did here at like 11:15. If this trade works, then bonds break down. Like they've been going in opposite directions. Okay. So what I'm proposing here, and a trade that I may have on, is a trade on the S&P right down in here, hedged with a trade on treasuries right down in here. Okay, treasuries make a new low. You're talking about buying the ARMR moving average. Okay, so if treasuries take out this low, then I submit to you anybody on an S&P trade here, would make a lot of money. I think you'll get a breakout in the S&P. So this will break down and you won't need to hedge. It'll take out the low of this bar right here, which was the reversal up bar. See that? If that low is taken out, then no need to have treasuries. But this is one way to put on a trade today and protect against wild stories, right? Because if this all of a sudden is a huge down bar, this is probably a big up bar. And so we're talking about what the Chinese may or may not do when it comes to treasury bonds. And we just don't know, right, guys? We don't know if they're going to dump treasury bonds or not. So we're watching treasury bond market to see what's happening. I'm worried less about that than I am the currency fluctuations. But look, if this thing breaks down, I mean, treasuries are close to breaking down. If they break down, there's a problem. This looks like a nice double bottom right here. So this was a nice entry point. This was the setup. So I'm going to be marking this off for you again of, where the setup would be, right? And I'm kind of talking you through it. That was the entry point here. And let's pretend we're stuck in a range the rest of the day. This right in here would be the first target. We get back up to that location, probably a place to book a profit. If we're on a carry trade, that would be a place to book a profit. If we're trying to set up a trade we hold overnight, you raise stops aggressively and see what happens next. I think if I was on this, I'm going to trade it like a normal carry trade, booking gains as I go, and then I'll just put a trade out at the end of the day if I wanted to carry something overnight because I'll have profits booked. But I will give it room. You know what I'm saying? Like if it's a huge up bar, bang, 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 I'm not going to mess with it. I'm going to leave it alone, let it do its thing. Way to go, Ronaldo and the Silver Fox. You guys are having a good move there. You're right, Richard. Although I don't think China's walking into Taiwan anytime soon. I don't really believe that. I think they'll absorb Taiwan in a different way, in my opinion. But what do I know? I mean, who knows? I hadn't thought of that. Temporary blockade. Okay.
Order filled.
That's the higher stop right there. I'm not sharing what I'm doing today because I'm trading very, very quickly and grabbing when I can grab it, and it's not right for everybody. And I'm going to share with you what the setups are, and then you just do whatever you want. Okay. There's the entry point. This is the stop that should be used. I'm not saying I'm using it. I might already be out of the trade. I might have booked a profit on a quick pop. I mean, I'm a cat on a hot tin roof today when I'm trading.
Order filled.
Hey, mom, chill. Look, man, we talked about earlier, you might not have been on yet, but yes, there was an 11:30 meeting, emergency meeting for the Fed. But I just want to remind everybody, in every crisis, the Fed has emergency meetings. They had emergency meetings in 1998 during the Asian crisis until finally things were getting so destroyed that on a Sunday night, they decided to do something and announced it Monday morning. They bailed out long-term capital management. In 2008, there were several emergency meetings. They meant nothing as the market kept going down. Can they lead to a 2-day rally? Absolutely. There could be a 2-day rally at any minute. I mean, this can happen at any minute. We saw it already. The S&P moved 8 handles in like 30 minutes. So we're in an insane market right now. And without a doubt, there could be a story that hits the tape. There could be a story that comes out of this emergency meeting. Fed is ready to take action to support the market, and you'll get this pop, and then it'll fade. The market will force the Fed to actually do something. Now, Mom Joe, listen, if they come out of that meeting and say, we're reversing our quantitative tightening, we're starting to anything. Let's say they came out and said, we were planning to taper off our QT. Remember at the last earnings, the last Fed meeting, they talked about tapering the QT. They could come out and say, we decided we're done. We're not doing any more tightening. We're not selling any more bonds. We're done. That would probably put a bid in the market for what, a couple of days? I mean, at the very, the biggest 2-day rallies happen in a bear market. So anywhere out there, there could be this face melting rally, and it could be a story like that. But unless it's a story of literally adding liquidity to the system, I think it'll be like phosphorus, burn hot and then burn right off. It's going to be hard to leave the desk today and get a bite to eat here. I'm going to have to run to do it. Market kind of hangs in the balance right here. This is either a really nice setup for a run, or it comes back below the VWAP and the close is going to be ugly. This is why if you're trading, what I'm suggesting is a long treasury bond position and a long S&P position. We don't know which is going to break. If this breaks down below the VWAP, treasury bonds, I imagine, are going to be breaking out. It's possible they both break down together, but that hasn't been the case on an intraday basis. The Silver Fox is making a really great point here. He's saying that saving face is a part of China's culture. China's government is not elected, and thus they must believe they can absorb economic stress better than Trump. This argues for China maintaining its tariff retaliation moves and maybe even being more aggressive, I say. Also, if China starts to dump U.S. treasuries, this will likely accelerate their buying of gold. There's few other places to go as a tier one asset, right? Any weakness in gold is a major buying opportunity, and I tend to agree with him. All right, now Erez. Erez is going to share with us a bull case. I'm always interested in the other side of the story, Erez, just to keep myself centered. So go ahead and give me the bull case. In all of this, it could be a massive tax cut plan down the road. The Trump administration could, in theory, use all the tariff revenue that's going to be collected and launch another tax cut program aimed at corporations and the wealthy. Powell's holding his ground right now on monetary policy, but could be forced to lower rates faster than anticipated to address growing recession. After the pains inflicted, the combination of rate cuts and potentially a form of QE and tax cuts could bring back the bull. Well, that's long. I don't disagree with that. I mean, I guess that's the argument, but I think that's further away. There's a lot of ifs in that statement. I think you would agree, Erez. There's a lot of ifs in that statement. So it's going to take a lot of time for that to play out. And I think, but if that what you just suggested, if that scenario is about to play out, not about to, but plays out, we're going to get a bottoming structure in the market as that's playing out. Do you know what I'm saying? So we'll have more than enough time to start rebuilding a portfolio if that's the way it plays. And by the way, guys, tariffs are one thing. They have a lot tied up. I don't think they would. We don't know what they're going to do. We're just spitballing here. But the Chinese, I feel like everybody, we're all just spitballing. But I feel like the commentary is always the Chinese are really aggressive at doing this, that, the other thing. To stoke up nationalism, to stoke up fear. But if we take a step back and actually look at what the Chinese do, they have a ridiculously long roadmap, as Dad says. They're not elected officials. They're playing the long game against the U.S. short game. They're playing that this it's going to play out over years, decades. And the U.S. has to deal with a presidential election every 4 years and a midterm election every 2 years. I don't see the Chinese making any aggressive move. To me, they're like an amoeba. You know, they just kind of a big blob. They're like a blob that slowly absorbs things, you know, and they're like a lava mass. You know, like the U.S. is like a tornado ripping through wherever. And China is like a lava mass. It's going to get to Taiwan eventually, and there's nothing you can do about it. And they're just going to absorb it. You know what I'm saying? But it's not going to be all of a sudden the lava gets up and starts running down the hill. And that doesn't do that. So I'm just saying, based on the way China's behaved, it helps the U.S. election cycle to drum up fear. China's going to go take over Taiwan now. I mean, I just don't see it. I could be wrong. But that's not the way they behave. And China turn around and they're going to dump all the treasury bonds at once. That's not how China behaves. They would devalue their currency first, in my opinion. And we've seen them do that before. They have other things. I mean, that's my opinion. I believe that treasuries will stand alone here. Explain that to me. What does that mean, Erez? bought back. Oh yeah, okay, yeah. So am I. I mean, I don't want to share what I'm doing too aggressively today. Okay, but obviously, if I was on if I was on this trade, I would have already booked a profit. Okay, so I wouldn't be on this trade anymore. It's going through the stop there. A gain would have already been booked. If you're trading, you have to trade aggressively today. Okay, so that trade would be, and I'm not going to put down where I might have. I'm talking. I'm trying to. This is not a day for us to be. I keep trying to explain this. I hope you guys understand where I'm coming from. This is not a carry trading day. We're on the outside, okay, of a tail risk type of day, and so I'm just highlighting for you on this minute by 3 minute S&P chart where you could put a position on, where I would take a profit. Okay. I mean, actually, I'm not even doing that. Where I put a position on, where the trade ends, where I put a position on, where the trade ends. I might have sold some up here. I'm not going to go over with you every trade today, how I'm doing it. Net, I'm profitable trading on the day to day. That's what I am willing to tell you. I will tell you that I have on a treasury bond position right here. And I'm going to hold that position unless it closes below the red line. I am doing that right now. I'm going to hold on to that position unless if it hits that red line, I'm out. If it goes up from here, then I'll have a decision to make by the end of the day. If it's not up dramatically from here, then I've got no decision to make. I'm not carrying anything overnight unless I have a big gain in it and I decide I'm willing to play with house money. I mean, I might do that. And Aaron's, gold has every right to pull back. Let's go look at the gold chart. I mean, we not only every right, we hope it pulls back, Aaron's. We hope it pulls back. Now it's down to the 50-day moving average almost. What a gift if it came down to the 200-day. What a gift that would be. I mean, I literally hope gold gets out of whack on the downside. I got loads of cash and a minimum size gold position on, right? If gold gets whacked down in here, that would just be a gift. God, I hope that happens. All right, guys, I don't have other than my treasury trade on, I don't have a trade on, and I'm going to run off the desk and grab a bite to eat. I'll be back in 15 minutes. Maybe let's say 12:30 we'll reconvene. trying to get stuff done and go grab something to eat, and I couldn't even leave the desk. Treasury bonds, that position's getting stopped out. I don't know what that means. I don't see the market going up yet, but that's a nice location right there that may be worth a trade with a very tight stop. I mean, it's going to have to take out the high, and I've got to do it. These days are so hard. If I wait, it's too much of a tail risk. If you go early, you lose money you didn't have to lose. That's the hardest part of this. So what's this right here? The high there's 498.28. What are we at now? It's the first 498.29. We're literally going above it right now. I think a trade, if it's going to be on, it has to be just, it has to be put on, and then you just got to take it off real quick because you can't pay up for it. The move is just too huge. I don't know if bonds breaking down is bullish or bearish for the market right now, to be honest with you. Can't figure that one out.
Order filled.
If you get on a trade, this is the stop right here. So the theory on a day like today is get it on as close to the stop as possible. So this was the next setup. You can see right in there is the area to get long. And what you have, building is one of my favorite pennant formations. And now pennants can go either way. So this could be an ugly close or a breakout. We don't know, but it's doing this. I don't know. This was the original breakout. Something like that is going on. This is the trade. I mean, I'm cutting off that tail and I'm cutting off this tail. And this is the body of trading that's going on. And it's either going to break the downtrend and rip, or it's going to break the uptrend and crater. This has turned into an intermittent fasting day without me realizing it. I can't leave the desk. Bitcoin. Mark says Bitcoin worst quarter since 2015. What a run to 121,000. Any thoughts on an entry point? Was too far back, going below 10,000 was discussed and no one was buying. I don't know what you mean, Mark. I'm not exactly sure what you mean there, brother. But we could take a look at a Bitcoin. Well, I think let's go check real quick to see what the MicroStrategy tracker tells us about where. So it's still 67,458. Okay. So 67,458 is still the price where MicroStrategy, that's the red dash line there. You know, I think that's a good entry point. I think it comes back on the 67 to 70 area and unwinds the entire rally from the pennant breakout. That would be a location, you know, where I would look for a position. I'm not saying I would buy it there, but I'm saying you're asking me to come up with an area that I think would be a reasonable location to look for a setup, right? And so I'll highlight that in like a light green box. That's where I would look for an entry point. Have it come down, close, just completely unwind the breakout, which the rest of all other risk assets have done that. So I would assume it's going to come down to there. That's my guess. If it does something better, then that's relative strength, and it's turning Bitcoin into something more interesting to me, right? It won't be a risk on asset. It'll be something more interesting. So, but if it comes down in here, that would be normal. It's a risk on asset. It comes back down and erases the gains from, pretty much the election run up, right? And then you would look for some type of bottoming structure to set up, and that's where you get on it, So, 65, let's call it 65 to 70.
Order filled.
I think if any positions were on, the stop would be raised up to here. And then I would look to put it back out if it breaks above this green line. You know how important this green line is, you know? That's kind of where I would put the trade back out. I'd raise a stop to make sure I can't lose money on this trade. You can hold it in here. You can book a profit if you want. If you bought it quick and you have a small gain, you book a profit. You can hold it in here with a higher stop, but you really want to be long if we break into that green box. And so I'm going to be right back, guys. All right, back on the desk. Only thing I can make fast enough is a bowl of cereal. Treasury bonds are really leaking, Harris. Wow. If Treasury bonds go down and the market goes down with it, then we know we're in a real pickle. That's incredible. Hey, why don't you add Bitcoin to the list? Oh, here's a huge up bar. What's the story? There's the green box.
Order filled. Is that a bond auction? Bond auction information? Order filled. Order filled.
The last one was a tail. Let's see if this one ends up being real. This is the shot. This is definitely the shot.
Order filled.
And this is another setup right here. You can see it. You can see it forming. It's just whether or not this is just a chop day or is it going to punch through. So this would have been the bar to get long on somewhere in here, you know, and then what happens from here? Richard. I keep that on the down low, Richard. You know, at Warren's request, he requested that I just keep it on the down low. He doesn't want you guys to know he's on the trading desk with us all day. He has his Berkshire Billions, but then he has his own trading account. He likes to, you know, hop on carry trades with us. Right. If it can ever break away from the put wall of 500, that's the question, right? That's the question. Can it break away? And does Monday turn into a rally afternoon? There's 496 and change. I mean, if we're on a trade here, I think a stop is all the way up here, which is the 500 put wall. Yeah, and if it retests a level, I'm out, and I would start again. Like I'm not going to stay long at the party if it doesn't break out here, Dave. Like if it goes and retests, that's how I'm trading today. I'm trading wicked fast. If it doesn't keep paying me, I'm taking small gains off the table, trying to grind out a profit today and not leave my capital exposed. Because when it starts to unravel, it's just a huge down bar. And so, I'm trying to get on something that works. And then I take a bunch off if there's any sign of weakness, and then I put it back out. I'm grinding it out, I'm not really trying to, what I'm trying to do is stay in the game so I get on a trade that skyrockets. That's what I'm looking for. Now, it could be that the only trade skyrockets is the first one today, which, as luck would have it, was the one trade I didn't take. But I'm looking for an afternoon trade here. I got to get more comfortable trading that morning trade, even if it's for a smaller position size, because when it works, it's just such a face melter. a delicate balance, Dave, like to be out quick, but also in long enough to actually make some coin if it goes. Like it's like real tight right here. Boy, this pattern is pretty interesting because it's getting really tight. Almost rolling my stop to the high of 2 bars, a low of 2 bars ago, you know? You know, I think my stop would be up here now. 501 and change. Seriously, the low of 2 bars ago is my stop. I just keep rolling it up. I mean, if I had a stop, right? Wink, wink. If I was trading 502.56 now.
Order filled.
This stays down here. Not only would it take out the low of 2 bars ago, it'd be a medium bar reversal and you wouldn't be able to hold that stock. See where it closes the bar, but that would be a classic medium bar reversal. At 133, shoot, if it closed down there, that would be a short setup. Let's see where it closes. No, it stayed up. It stayed off of it. You know, it'd have to be like a real down bar. Now, you know, this takes out the low of that bar, and you know, you can't wait till the end of the 3 minutes. I mean, you have to suffer. If it's a tail, it's a tail. But if it takes out the low of those 2 bars, trade's definitely over.
Order filled.
So it'd still be on a trade, and the lower 2 bars ago, it's right there still. At the end of this bar, we move the stop up. 503.86 would be the stop now.
Order filled. That would be the first spot you would book a profit, which is right here at the, that was this first spot right there where a gain could be booked. That first standard deviation above the VWAP. The lower that tail is the stop now. $504.59. It's turned into a good trade. Is that TLT down 3%? Treasury bonds are down 3%? Wow. That is an ass kicking on Treasury bonds. This market is funky. Mom Chill, glad you grabbed that. Love it.
506.54 now. Let's call it 506. goes through it again, it would be off. Trade would be over if it goes through the price again. Which is really that low. 505.59. Trade's hanging around, trying to stay on tails on the first minute of the bar, bouncing on the next. Coming up on 215.
It's amazing this trade has stayed on this long. But that's the stop right there. It goes through it and, the trade's over. Back in a second.
That'll take me out right there. That's it. I wouldn't wait any longer. That was a good trade, though. Oh, just kidding. Just kidding. Flip short, anybody? Anybody want to flip short? That's where you would get short if you wanted to. And I'm not saying that you should. You know me and my opinions on shorting. Got to get in there quick, and then you got to get out quick. And, you know, most people shouldn't short. If there was ever a location, you know, that last bar would be it. I'm just sharing ideas with you here, so take it with a grain of salt. God, the market's been gaining and losing so fast. It's like crazy. 1 minute the market's up 1%. Now it's down on the day. It's like, it's insane. It's trading like a meme stock. So I'm just coloring this in as the end of the carry trade was right there in those pink boxes. I don't short the S&P, but if I did short, it would be the Dow, small caps, NASDAQ. I don't know if I would. I don't know if you need to do semis here. I think I would just go with the indexes. And if you're putting on positions, you don't want too many of them. So if it starts to go the other way, you lose money having to execute 4, 5, 6, 7 different trades. Just pick one or two that you like and do them at the size that you feel comfortable with. You know, and it doesn't have to be shorts. I'm just having fun highlighting boxes for you on, you know, on a normal day. What what you could do. Who knows what's going to happen between now and the close. That's what's hitting the tape right now, and Trump's retweeting it. At some point, people will stop responding to that, and that would be bullish. I could see the market settling at this large gamma location here, right around 5. Let's bring in some of these gamma lines because that one doesn't matter anymore. Too many lines on this chart right now. Oh, God damn it. I don't even know where the level is. Let's just move this to the 5. That's the only one that kind of matters right now. Let's go. No, I'll be honest, those don't even matter either. Let's just get those off. This is all that matters right now. Kind of a quiet afternoon in here. I mean, I've got nothing really to do. That second trade was over. We had 3 trades setups. Actually, there were 4. There was that one in the morning. That was here. Then that one. Then I don't know what this is here. And then here, that got stopped out. And then here, that made money. So a couple made money. Now it's just kind of drifting. You could go either way in the last hour, back down towards the gamma location of 500. That would be normal. You could close right down there at 500. That wouldn't be bearish. That would just be normal action, I think.
Chicago Dave, you out there still? Could you walk me through a hypothetical trade using, because I know you trade options. So I'm not asking you to reveal your position size or anything like that, but I'm just curious. Like, let's say, I don't even know if you were on this trade this afternoon, but at like 1:15, there's the entry bar to get long a trade. That makes a little bit of money there. Not a bad trade. But I'm not even talking about this enormous. Let's just say a normal trade. This was like a crazy trade. But in the morning, it was just that was an insane trade. But let's say, you get this set up here, trading at 500, you're comfortable. You put a trade on. How many? But I'm not going to ask how many options, but let's say what's the strike and what's the strike and information, like 0 dated, 1 dated, and the strike. I imagine there's volume for a lot of contracts. I imagine it's very liquid. So I'm just curious, what's the time and the strike that you're using? And then how fast do you take it off? Do you like peel off a little bit as it goes up each time? Or are you picking one entry place and one exit place based on, I don't know, profitability? Let's say like Mom Chill, who was in the room with us earlier. And he he's maybe still in the room. I'd love to get the answer from you, Mom Chill. I'd like to know what you guys are doing when it comes to options. Like, do you just have a target of a certain amount of profits, and when you hit it, you're out? Are you looking at exit points on the chart? And what is it? I'm just curious. Yes, okay. As close as I can to a 70 delta. Could you explain the 70 delta for those of us in the room? I mean, I know what a delta is, but just for anybody listening doesn't understand what that means. Like, how do you figure out what your 70? How do you figure out a 70 delta? So before noon, you go 0 dated. After you go 1, okay. It should give you that info. Oh, I see. I see what you're saying in the options. Right, that's right. You don't have to figure that out anymore. I forgot. So you go to like SPY, right? Just for anybody who wants to follow along and figure this out on the options, and you pull up the options chain. Okay, so you pull up the options chain, okay, and so you're looking at SPY, right? Let's say we're doing this on SPY. So there's 0, April 7th, April 1st. So and there's the delta portfolio delta. Oh, I see. Yeah, I got you. Right, it's in the chain there. There it is. Yeah. So if I'm looking at that, that's interesting. Can you explain why the 70 delta is what you choose? Like, how'd you come up with 70 as the number for you? See, I always go with the largest open interest, but that's not the way. I mean, that's like a 0.2 delta. If I'm looking at 0 dated right now, or let's go look at one day. Let's go look at tomorrow. So like the 490s is the strike with a 70, or maybe the 491s. It's the best bang for the buck. Okay. So if you could pull it up right now, I'm just curious, just so I'm on the same page with you. Let's say we're looking at April, and we're looking at the calls, April, and I'm on my screen, it shows like 490 would be a 70 delta. Is that what you would choose? 490, 489, 491, right in there is the 70 range. Is that right? Hey, the short's working while we're chatting. Yes, but again, way too expensive. How do you know that's way too expensive? Why is that? I don't understand. Why would that be way too expensive? I thought you just picked the 70 delta. I usually pay. Oh, I see what you're saying. Oh, I see. So you're looking for a 70 delta and you don't have to pay more than 350 or $4. Is that what you're saying per contract? So you got to go walk up the other way, 350 or $4, and look for the 70 delta. On my screen, though, the higher up I go, the lower the delta. Like if I go to 513s or something. Well, could you tell me which one you would pick right now? Options are crazy high because of VIX. Oh, okay. But if you traded today, what would you do? Did you trade today? I mean, would you trade when it's not normal? Oh, okay. Ah, got it. Okay. Got it. Well, that's it. Okay. Now I get it. Now I get it. So Dave, to wrap up this conversation for anybody who's listening, I mean, I only trade SSO or SPXL, whatever. But what you're saying, so what I said this morning made a lot of sense then, right? I was saying to you guys, this is so far outside the bell curve of normalcy. Trying to carry trade doesn't make any sense. I mean, I could go out there and try to make some money today, but it's not a carry trade that I'm on. I'm on something else. Right? That I'm doing something else. And so when I come in the morning and I see a 70 delta on a $3 or $4 stock, then I know I got something normal and we're back into the normal bell curve. But when we have something this bizarre, then we're not. That's an interesting thought right there. That's interesting. That's a really good way to know. That's a really good way to know, just to wrap up this conversation. That's a really good way to know if we're carry trading or we're doing something else. If the deltas are blown out, then we got to follow some other path to making money when we're trading today. That path today was trading faster, putting trades on quicker and taking money off the table quicker, because it's not the normal delta, which is the stair step that we're used to. We get on a trade. This is the volatility we're looking for. It looks like some of you guys answered my question too. Let's see what you guys had to say. Okay. Mom Chill says momentum and option change to determine expected move. Ivy says this morning they weren't priced that bad at all. And after 20, 30 point run, it would have been hard to pull decent profit. Got it. The massive run skewed everything. I appreciate that, Ivy. Thanks. Anything above 50 delta is good, but have to determine the market sentiment easier on news like this morning. The price volume. So you're saying Mom Chill says, 50 delta or better, he'll trade. Ivy says the price vol is now skewed after that 30-minute pop, really paying a premium and may not pay even much. Okay, got it, guys, got it. Options are trading at premium because of volatility. Earlier this morning, they weren't. It wasn't until the 30-point skyrocket. I get it. You would want a consolidation or a slow pullback and the prices come back down. Right. TLT contracts weren't bad. This is Ivy League answering the question here. TLT contracts weren't bad. I was watching them instead of the overall market. Okay. They burned the premium midday. Okay. 520 strike this morning on zeros went from $100 to 2,000 in minutes. Holy smokes. And I imagine there's a lot of volume there. Is that right, guys? I mean, how many contracts do you think? I mean, everyone's doing it, so I imagine you could do a lot. But how many contracts do you think you could actually do at the bid and offer? Are we talking hundreds of contracts or thousands of contracts? It's true, Andrew. It's gotten totally out of whack. And Andrew, this is one reason why I'm not trading triple the S&P anymore. Remember, I was saying to you guys, I mean, the way I express what you guys just told me about the options market is looking at the bid and offer spread on triple the S&P. The SPXL spread a few days ago went like this. It's like all of a sudden I'm used to trading 5-cent spreads between the bid and the offer, and it went to 25 cents. I was like, I can't trade that anymore. Forget it. I shifted over to SSO because it was smaller. And even that was a little bit larger, but you know what I mean? No more than a few contracts, unless you don't need your shirt. No. I'm not saying, Mom Chill, I'm not saying that I would trade thousands of contracts. I'm just curious how liquid you think it is. Not for us to do, but I'm just saying, how liquid is it? Is it only a few contracts? Or, is it more liquid than that? Got it. That's a good point. Chicago Dave says, when VIX gets back in the 20s, I'll go back into options. Interesting. Well, this has been interesting. I don't ever trade options like this. So thanks for sharing the information now, everybody. It's funny. We both come about the same answer in separate ways, right? For me, it's the bid offer spread on something that uses options to create triple You know what I'm saying? So I can see something is wrong. I can't trade that anymore. You guys are looking at the delta and saying, this is not right. I can't trade that anymore. So it's kind of the same information. It's pretty interesting. Oh, you think so? Okay. So Dave thinks like it's liquid enough. Market maker will hedge immediately. I guess you're right about that. That makes sense. That makes sense. Yeah, we're talking about trading the S&P. So he'll create as much as I want. That's true. That's a good point. Yeah, I wasn't thinking that one through. Of course, the market makers will just keep creating and collecting the spread and hedging it off. Of course, they will. So the short worked back to the look at that, Dave. It went right back. So the short worked right back to the 500 as expected. Where do we all think this is going to close today? I hate to, I don't know. Just for fun, we're just spitballing and predicting. When I was early in my early days, when I first got into the business, I was a broker and I worked at Lehman Brothers back in the day. This is like late 1980s, early 1990s, when it was still a very respected name. And every Friday, all the brokers in the bullpen, we would all put in money into the pot and see who was, closest to the close on the Dow. It was like a lottery. Where do we all think this is going to close today? This is a day trader's. It's true, man. I mean, we're making it long and short today. So this is a grind it out for me because I missed that first trade this morning. Mom, Jill, how did we not put that trade on this morning? I mean, I hate trading the first half hour though, man. My bread and butter trade is the trade we got on at 115. I like when it becomes very clear on the top day chart. You get that pennant formation or very tight wedge at a particular location. You know what I'm saying? And that's my comfort zone. So I could put that trade on today. I made some money up here. I can flip short, make some money back down here. But it's like I'm blocking and tackling and grinding it out in the corners to grind out a profit today, when all I had to do was put on a third of my normal trade this morning. And I don't think Fitz is here anymore. I think Fitz is probably out. I don't know if he golfs or what. What do you do, Fitz? Are you still here? I don't know if Fitz is still here, but he deserves to be out, out in the boat somewhere, because that was the trade this morning. Jeez, man, 8%. But I'm going to do it tomorrow. If I see the setup and I call it out to you like I did this morning, there's no excuse not to have a position on it. And if I don't feel comfortable, bang, just put out a third of the trade. If it reverses, I'm out. And if it goes up 8%, a third's going to pay an unreal amount of money. So once again, it gets back to position size. Take the decision out of it, like the I think or I don't think bullshit out of your trading. Just get rid of that. Is the setup there? Yes, it's there. Trade, bang. I mean, that's the only way you can trade, like an algo, really. And if it's something you're uncomfortable with, you go smaller position size, and you still put the trade on. You would have a massive day today. So something to think about. Got it. Thanks, Ivy. That's interesting. He wrote something I do to have an idea of my risk profit is whatever the delta is, say 50, I'll make or lose 50 cents per dollar move, and use the gamma to know what the delta is changing per dollar. Got it. Maybe explain to the room, how does the gamma tell you what the delta is changing per dollar? How does that, if that's a short answer, if not, that's okay. Oh, got it. Thanks for that. So what Ivy says, say gamma is 0.06. It means the delta will change 6 cents per dollar. Got it. Thank you. Here, I'm just going to put in the Slack room how delta and gamma are explained using an example. Here's an easy example, and this is just expounding on what Ivy just put into the comment section of our live stream. So say a call option has a delta of 0.5 and a gamma of 0.1. This is the easy way to look at it. If the stock price rises $1, the delta doesn't stay at 0.5. It jumps to 0.6 because the gamma adds 0.1 to it. If the stock drops $1, instead, the delta falls to 0.4. It's just a relationship. It's a good way to look at it. Thanks for sharing, guys. Much appreciated. Yeah, and that's the large. And 500 is the put wall. All right, what you got for us, Silver Fox? Got it. Silver Fox talking about Newmont. I mean, Newmont's just, kind of building a base there, right? 200-day moving average. Trading around 45 bucks. And we're just scrolling through some of my favorite names here. They finally blew apart IBM. I mean, we knew that was going to happen. That's going to be a gift. It was one of the last to break down here. I can't wait to get back on IBM. God, our whiteboard's going to be full of so many wonderful ideas. It blew apart GEV. Just take off some of this graffiti. Makes a double bottom at the 200-day. That'd be beautiful. They hammered the utilities, and they're continuing to hammer. Good thing we exited, booked our profits on those utilities. Here are some of the names we sold recently. Let's take a look at them. We sold all these things higher. Dominion's getting blown out. Duke. So we booked our profit on all of these. EMB. Got EMB out before the collapse. KMI. Lost a little bit there on KMI. Altria, I'd love to get back on Altria. It was a big sell-off this morning down to the 200-day. I just don't buy falling knives. At some point, this will set up again. I'll be back on Altria. Uber got blown out. We got out of all of these at higher prices, so we've earned the right to take a little bit of risk when it sets up again. What did Philip Morris do? I can't wait to get on Philip Morris. Gosh, I wish they'd bring that thing down to the 200-day moving average. Oof, I'll buy that all day long. It gets down to the 200-day and, of course, sets up an entry point. It's a dividend play, but it's also a growth story. You know, we've been on this tobacco trade for over a year now because they're changing the business completely. CEO of Altria says they won't have rolled tobacco products in a decade or less. Everything will be stamped approval of the FDA as a product that is less cancerous, which is kind of silly. It's still cancerous, but a lot less. All of it being delivered through different delivery methods, all that have intellectual property around it and carry higher margins. I mean, it's a dream for the tobacco companies. And a dream for a dividend investor because the yield is so high. It's at the very top of my whiteboard, without a doubt. Trump says he's having direct talks with Iran, says he would prefer a diplomatic deal. You can't have a diplomatic conversation with Iran. Haven't we figured that out already? Damn. How many diplomatic conversations are we going to have with a death cult? It's ridiculous. Gosh, I hope we do what's right there. Oh dear. So it was Israel that was the first to go. Israel announces at a press conference with Trump, it will eliminate all tariffs, trade barriers, and eliminate the entire trade deficit with the U.S. That would have been the odds-on favorite country to be the first at the table, I think. I think that was a no-brainer. Whoever went to Polymark or whatever it's called, Polymark, right, and bet on Israel to be the first to cut a deal. I bet the odds were pretty high on that one. I thought Japan would be pretty quick to the table too. They're really beating up utilities today. I guess they would, because treasury bonds are getting hammered. Boy, treasury bonds are getting hammered. It just can't be good. It's kind of become untenable to invest in anything but treasury bills right now. I'll be, I intend to increase my gold position, but there's no rush. I mean, gold's getting hammered with utilities, all the things whatever we had left in the portfolio, we dumped last week, and good for us. I mean, the only thing I've got left is a minor position in physical gold. It's on the 50-day moving average now. At some point, it'll set up again. I just can't wait to put that trade back out. And I imagine I'll get a shot at the utilities again, cheaper. I'll put those back out too. I'm going to have to respectfully disagree with you on that one, Dad. It's not best to nibble on anything in this market. I don't need to catch a falling knife. And I certainly wouldn't, respectfully, I would not bet on V-shaped rallies. But that's just me. Everybody do their own thing. There's the defense of 500. Of course, you wouldn't be short anymore anyway. We got back to the price we wanted, so you'd be grinding it out. You'd book a gain on that short right at the VWAP. You could see all that right at the VWAP. It just stopped. Oh, geez. JNVR up 1,000% today. There's always something crazy going on like that. It's got no revenue and like, bleeding red, losing money like crazy. That's a great stock to manipulate. 40,000 shares trade on average a day. With those stocks, I mean, I'm just not getting on somebody else's Ponzi scheme. I'm just not doing it. If we all got together and wanted to find a very thin micro cap stock with no earnings, no revenue, running out of cash, and quietly buy a bunch of stock and then go out and tell everybody about it on Reddit, sure, I'll do that. I mean, it's illegal, but I'll do it, right? And I would do that. I mean, of course I won't. I'm talking tongue in cheek, right? I won't do that. But what I'm saying is that's what's going on. Somebody has been accumulating that stock quietly for like a month, not moving the volume, just taking shares. Then they go out on all of their news services or whatever it is. They get people to subscribe and they start talking up the stock, and they got friends on Reddit that do it. They all do it until they ignite it. It skyrockets and they're dumping and making their money. And, look, anybody who's been in the financial business for 35 years, that's a totally illegal activity. If you're a registered representative or if you're a broker or something, you can't do that. You just can't do that, right? But if you're just a guy on Reddit who started a Reddit channel and, you're a brilliant marketer and you've got a million people to follow you on Reddit, the SEC doesn't have any rules over you. They can't figure out how to stop those people. So, I mean, look, go ahead and do it. But I'm not going to be their patsy. I'm just not doing that. I'm just going to, I'm not doing that, Anybody who saw the movie Boiler Room, go see the movie. This is exactly what people are doing today on Reddit, Wall Street bets, stuff like that. But these people aren't regulated. So there's not a regulator that can go shut them down. There's nothing they can do. These people aren't giving financial advice, right? They're just in a Reddit chat room talking about stocks, Wall Street bets. And look, I don't hate the player, hate the game, right? I'm more power to them. I'm glad they can go manipulate stocks and steal money from other people, and it's okay. All right, go for it. But I won't do that. It's a game to me that totally lacks integrity, and I just can't do it. Won't do it. Even if I wasn't, licensed, let's say, as even if I didn't manage significant amounts of capital in a manner that requires compliance. Even if I didn't, I still wouldn't go out there and build a business like that. It's just, to me, something I find distasteful. And look, that excludes, there are some services out there that, we've been talking about in our trading room. Get on it here, and when it pops, hit it and trade it out there. I get that. I mean, go ahead and try to trade these things, because you get on one and it pays for the next 10. So I get that, but the whole thing is just distasteful to me. Yeah, I can't either. Ivy, let's get back into the bell curve and go back to our, what we're used to. I agree with that. That was just too easy, Mom Joe, and I think Fitz, who was in the room earlier, was saying that, buying 3 gap downs in a row, you buy that third gap down, you're going to make some money. So that was the right call. Gap down, gaps down, and it's going to bounce. That's just kind of statistically speaking, that kind of makes sense. And honestly, I don't think that Black Monday comes probably a different day of the week, and probably after the market tries to rally for a few days. And then the next piece of news, bang, that's usually how these things go. I thoroughly expect at some point, ladies and gentlemen, the market to have a couple weeks where it rallies back to that downtrend. That's what I think will be happening at some point. And I'll be looking to short that up here. I'm not shorting between here and there, but if it gets up there, I'm going to look to short the downtrend. I'm going to try to make money on the way back to the downtrend. But if the thing just keeps falling out of bed, I just keep, building alpha because I'm sitting in treasury bills. And then we'll look to day trade this again tomorrow. I'm going to trade everything I see tomorrow. I'm going to manage my position sizes is what I'll do. So if we have to in the morning, we have to get on that trade. It makes too much money. Now what happened on Friday was I tried that trade, and I don't think I did that one. But yeah, so Friday gap down, we didn't do anything. It rolled over and broke down. But that's because it didn't really do anything, right? Look, Friday's trade, it gapped down, went down, and then it just never gave us a confirmation, as you could see. That was the yellow bar here, and it just never closed. It never closed with that upstick. This bar we almost bought, but it closed in the bottom half of its range, and so we didn't buy it, and it went straight down. Now, fast forward to this morning. What was different about this morning? We had the same exact look, gap down, go down. There's the yellow bar. The next yellow bar took out the high. That was it. I mean, that was the bar to get long. Bang, right there. You didn't have that on the prior Friday. I mean, on the prior trading session. See, look. This is the playbook I'm talking about. I should have just played it. Because, see, on Friday, it never did it. It just kind of languished and then broke down. You never had that bar that closed significantly above the high of that first yellow. which is a simple paint bar study we put together in TradeStation. That's how we get those yellow V bottoms. All right, well, we'll get at it again tomorrow. There's going to be many opportunities along the way here. Yeah, the ratio, Brian B, the ratio on silver to gold is up near 100 to 1. It's crazy, right? Crazy. I don't know if it's a coil or what, man. I don't know what's going on there. All right, Dad's writing, Silver Fox is writing that, gold tends to V bottom during times like this. So his call is that gold is going down only because there's some liquidation in futures. And as soon as that's over, it's going to snap back in a V-shaped rally. And that's why he's saying he's out there nibbling away on it today. And he'll probably be nibbling on it all week on weakness. All right. I mean, I'm not going to debate that with you. I always like Jeffrey Gunlock, so I pay attention to what he has to say. What he's saying right here is the Fed is just not in a position to reverse course and cut rates. So he thinks we're headed for a recession. GME squeezes up on a market down. Why is that? Why would that be? All right, ladies and gentlemen, I'm going to wrap this up a little bit early. Not much left to discuss right here. Probably back to our regularly scheduled programming tomorrow. That'll be a morning meeting, 8:45 for Armor Report subscribers, and then we'll go to Armor Insiders. We'll get live at 9:30 for more of these types of conversations. I had lots of fun chatting with all of you. Thanks so much for joining. If there are days as we go forward that are totally insane, and I feel like it would make sense to open it up for all, then we'll do that again. But Friday, Monday, wanted to share and gather information with you and share strategy, and then we'll see where we are. Maybe we'll talk again with all Friday, let's say, end of week, see where we're at. Okay. Everyone have a wonderful night. Safe trading the rest of the week, and I will see you guys on the flip side. Of course, don't forget, sometimes I pipe in on X. I'll start a spaces on X for the morning meeting. So if you're not joining us on the morning meeting, sometimes I'll get a spaces going and you guys can pipe in and ask a question or two as we're getting our strategy ready for the morning. All right. Everyone have a great night, and thanks for spending time with me today. Appreciate it.